Hello everyone, and welcome to today's gaming event. My name is David Myslinski, and I will be your moderator today. I'm a director with Vator Securities. Vator Securities is a boutique investment bank helping growth companies to raise capital. Last year, we raised in excess of 1.5 billion Swedish crowns for predominantly Nordic growth companies. So Vator Securities has been hosting a series of tech-focused events this year. We started off in March with focus on software as a service. In April, we looked at digital health. Both these sectors are extremely interesting and undergoing a lot of growth. And the same can of course be said for today's focus event on gaming. I am also a board member of fast-growing games development and esports group Fragbite. So as you can understand, gaming is close to home for me. Okay. It's difficult to talk about this industry without talking about mergers and acquisition, about compounding. I don't think there is any other industry where this element is so significant. As you can see from these logos, there are quite a few players that have M&A as an outspoken strategy. And this isn't even all of them. You could also mention Zordix, Mobile Network, Fragbite Group. The list goes on and on. So M&A might stand for mergers and acquisitions, but it can also stand for makes all the difference. So in area games, M&A added 34 to top-line growth for Embracer Group. Also, you can see on Stillfront, top-line grew 91%, of which 9.5 was organic. So there's a really huge impact for Stillfront from acquisitions. You can also see Media and Games Invest, 96% growth, of which 38 was organic. So in many cases, there is almost a majority of growth coming from acquisitions. We can add EG7, and the 33% I have stated there is a big underestimate, I realized this morning. The truth is probably closer to between 50 and 60% following the two recent acquisitions. And we have MAG Interactive as well there. And once again, this list is in no way exclusive or exhaustive. And there's more where that came from. Just looking at the latest quarterly reports, we have Embracer Group stating they have 17 billion in cash and credit, 20 late-stage talks, and they expect amortization related to acquisitions to more than double the next 2 years, and the company is basically debt-free. There's also a quote from Thunderful: acquire complementary business and IP rights, acquire development studios and other gaming companies. This is very clear. And MTG, continuing pursuance of relevant M&A opportunities for the rest of the year. So we continue looking at Stillfront, 2.3 billion SEK in cash and credit, leverage at 1.3. That is perhaps far from being debt-free, but that still leaves a lot of room for leverage. I remember Jörgen saying he has looked over 1,000 companies and being very selective in choosing his acquisitions. So I guess we will dig into this later in the panel discussion, but I guess there is still room for more acquisitions to be done. And there we have EG7, 2 fresh acquisition, and the strongest ever M&A pipeline. So, continuing on to Media and Games Invest, combined with a strong balance sheet after the euro 40 million tap issue, we are ready for further organic and M&A-driven growth. So no lack of intentions. The intentions are clearly stated. And there's also the possibilities, of course. M&A can also stand for multiple arbitrage. Here is a rough summary of the latest acquisitions. Looking at Embracer Group, those multiples don't really tell us a lot because they all relate to the past. looking at what these companies earned in 2020 or last 12 months. So looking forward, the multiples should definitely be lower, so at least it's an upper boundary. And given the market valuations of these companies, there is still the opportunity to make multiple arbitrage. Looking at Stillfront, we have Game Labs, we have Moonfrog, and Game Labs is actually, that multiple is based on a 2021 estimate. Oh, I should also add that I have not included any bigger earnouts in these calculations. Still, with the current valuations of these companies, there is room for that. EG7, we have those also multiples there in the picture. I would say a mean or average would land around 6, perhaps a bit higher, depending on also on if you look at past figures or forward-looking. Forward-looking, I think, are the most relevant, because a fast-growing company should be that should be taken into account, of course. So today we will talk about gaming. We have a long list of companies that will present themselves to you today. They are all growing at impressive rates. So I believe there are really many reasons for investors to stay tuned in covering this sector and choosing the best picks. In just a few minutes, we will kick off today's presentations with EG7 and CEO Robin Flodin. Stay tuned. We will now take a short break. Thank you. Welcome back, everyone. I will now present EG7 and CEO Robin Flodin. Robin, please go ahead. All eyes on you.
Thank you very much. And I also want to start by welcoming everyone who's here to listen to our Q1 investor presentation. So this is the best quarter in EG7's history. Record by any means, from revenue to profits, cash on balance sheet, everything. And I can only say that I'm extremely proud of my team for the delivery that they've done, the growth that we've seen and the journey all the way here. But what makes me even more happy is, of course, that we're looking to an even brighter future, as we're seeing significant growth, both from the fact that we are consolidating our latest 2 acquisitions, are fully consolidated from the 1st of April, but also from our organic growth into Q2 and throughout the full year. We closed and made the transaction of Innova Games for 1.1 billion SEK, all 100% in shares through the quarter. And I think that this should truly show how much people in the industry believe in the journey that EG7 is doing. And I am humbled by the fact that Georgie, the biggest owner, decided to join our company with this respect. EG7 is an ecosystem for video games companies. We apply a buy and build strategy. We make money from 3 different sources. Number 1 is our IP portfolio with live and premium titles. This generates about 80% of the revenue. And 80% of the revenue in this is also reoccurring revenue. This makes us quite a unique beast in the video games industry, as many companies are very much dependent on releases, while we actually make most of the money you see from our reported numbers through things that are reoccurring day to day, month to month. But then we, of course, also have our games that are coming out that gives an upside potential for investors. Now with Innova, we've also added a platform that perfectly fits together with the live games that we have, that will further increase the revenue into these games and the profits, improving profit margins, and also giving us the ability to cross-promote the games in a better way. And number 3, last but not least, our world-class service segment, where we, for example, with our marketing division, does the main marketing for Call of Duty, Dark Souls, and many of the games gamers love around the world. And we think that this is a key strategy that we applied very early and has shown to be extremely effective, both for the fact that companies want to come and join EG7, because we have this service segment, because we can give something more than just cash, and are willing to take less cash, more shares, and actually join us on the upside. 2015, we were a small consultancy firm. 2017, we did 11 million SEK in revenue, and we listed the company with a vision and an idea of how to change the video games industry, with an ecosystem, with how we can add, buy, and build, and put together companies to create a bigger and greater whole. From that time to today, over the last 3 years, we have been the fastest growing video game company on the stock market, with over 300% CAGR. And once again, I really want to say thank you to the team for this amazing and impressive journey that you've helped all of us do. So let's look at the actual numbers. So if we go back to quarter one now, from last year to today, we see over 100% increase in revenue. But even more impressive, the 500% increase in profit, EBITDA. We always thought that one of the most important parts of this journey that we took on when we started acquiring companies was to control the value chain. Innova is the latest example of how we've applied this strategy, where we now have access directly to the community and the consumers, from the development of a product, from ownership of IP, or even direct connection with the licensing, all the way through the process to the consumer. And you are going to see that this will increase our revenues and our margins. We have some great IP, and I think that this is something quite unique to our company, where live games that have, some of them, been around for 22 years, like EverQuest, and still generating a significant amount of profit, and still have active fans following it, has been one of the things that we always love to see, and it's been a dream come true that we were able to add this into the company of EG7. And that's not only the IP that we have for ourselves, but also things like Lord of the Rings or DC Online with Batman and Superman. And these are games that have generated revenue and had fans excited for as long as 13 years with DC Online, and it's still growing, and we're still having some of its best months. From these games, with this strong IP, we have 50% of the company's revenue on a pro forma basis, creating an extremely strong backbone. And why this is very important is because video games, when you develop new titles, maybe it's new IP or just a new game, can take quite a while, and I think all investors know this. But having this backbone, this profitability, gives us the ability to be strong, invest in the right way, and be successful in this market space, both through the IP we own, lowering the risk of further development, but also for the fact that even if a game would fail, we would still be profitable, we would still make money through these games. For our latest acquisition on a pro forma basis, we would do 16% of the revenue from Innova's 4-game platform. And this is also long-term fans. The average user has played for over 5 years. Very different from the mobile sector, for example, where users are very fluctuating. We don't have to spend a huge amount of marketing to sustain these users. These users are in it to stay with their friends, to play these games, and we think that that's extremely important. 22% of our revenue would come from our service segment. And like I said, this is an extremely important part to our strategy. But I do want to say, because this is something a lot of investors always ask me, do you think that this will be a massive grower in the company's revenue on a percentage basis compared to the other side? And I say no. I always said from the beginning, when this was the largest part of our business, I think games will outclass and outgrow this quite fast. But it's extremely important to the ability to deliver better in our games segment. And much like we said, we have now most of our revenue in the game segment, and I think you will see this continuing, even if we add more acquisitions in the service segment. EG7 is a global company and set out to be, even though it started in Stockholm and have our headquarters here where we came from. We believe that video games are global and that being global means that you have to also understand the areas that you are operating in, growing our business on a global scale, and you should expect us to do this more and more. But also, of course, global in the sense that our consumers, the gamers, the people that is extremely key to our business are all around the world. When we said EG7, 7 stands for the continents. And you might ask yourself, do you really have gamers on all continents? And that's actually true. We even have gamers on Antarctica. We believe that aligned incentives is a key part of our future growth strategy, making sure that all the people running these businesses really truly want to be engaged in what we do. That's why we always have a big share part in all of our M&A. And you can see today that management and board represent 51% of the share. That's something we're very proud of. So then you say, what are your future growth plans? But of course, that's one of the most important parts. Number one, which is the low-hanging fruit, is putting our games on the 4-game platform. This will generate extra revenue as the games spread out in a different way and we have lower margin costs that goes to someone else's platform. Then it's expanding geographically, both the games that we have live right now and the 4-game platform. And then, of course, expanding the game, improving the games for the consumers playing today and adding new titles into the platform and into the other platforms that are available. And last, but definitely not least, we will continue our very active and successful M&A agenda. The 4-game platform is a great hub of games. In the CIS and Europe territories, Innova is today operating 13 different MMOs. And we believe and we know because of the data that there's a great revenue uplift for every game launched on the platform to the other games. So by putting all of our games there, not only are we able to, for the first time, launch this globally, but we're also seeing that every marketing dollar we spend for new games like Evil versus Evil will also go into generating extra value for the other games. And then you might say, so why haven't 4Game as a digital platform been global so far? And this is because the licenses has been the biggest issue for them, the IP. They have had certain region that they are able to be in, Europe and CIS. But now we own the IP and content that we can put on the platform. We can now change this and go fully global. Then we're going to expand the games that are currently there with greater updates and more things, because it's quite secure that you get your capex back at quite high margins to consumers that are there every day playing these games, and the only thing that they want is more and better. And then a small part of new investment, but very important, where one of the things that we're currently working on is an unannounced AAA MMO with one of the largest IPs in the world. With our M&A agenda, we will continue in the way that we have applied it in the past. We're running extremely fast, and we have more companies that want to talk to us than ever for the success that we've seen. But we're very selective, and we're not in a hurry, and this is something we keep stressing. If you go back to our history, we've done 8 transactions in the last 3 years. That's 2 to 3 transactions a year. And we think that that's an okay pace. We might do more, but for us, the most important thing is that these things actually fit into our strategy and that we're not just taking every company that comes along. And therefore, you should expect us to find more, grow further throughout the year, but with the right type of transactions that really integrate into our platform and to the things that we do. So why should you invest in EG7? I think if you believe in the future of video games, which I do, that there's a great value for investors to be exposed to this segment. And maybe you're already invested in other game companies, but you want to have a diversification into something that has extremely stable revenue, strong IP, an M&A agenda that creates growth, and a strategy that's a little bit different from the competitors. Or maybe you believe that our strategy is what's going to create that which we've proven in the last 3 years to be the strongest growth in the gaming market. Thank you.
Thank you very much indeed, Robin. A very impressive development, of course. Great presentation. I would like to pick up the thread about what I really liked, one of many things, but still, your strategy to control the whole value chain. Could you give us a bit more flavor on how you see that developing, perhaps even adding some, concrete numbers to what that might do for your margins?
I mean, it's a clear margin difference if you look at Steam, for example, or let's not say Steam specifically, but these kind of platforms, Apple and so on, it's quite known that they take up to 30%, right, of the sales. And we have less than 5% that's taken from the consumer. So clearly there, that makes a huge difference. But it's also the ability for us, let's say that you launch a game on Steam, you don't know what they're going to do with the consumer, right? They might market another game, but we can choose, this is the game we want to present to the gamer today. When they log into our platform, we have millions of users and eyes on that platform. Where do they go? Oh, we have this latest game that we're launching. Let's push that to the consumer today. So I think that, and that's quite clear that has a huge value. But it's also in things like the currency. There's a global currency in the platform. So rather than us having the consumer spend into every single game, we have them spending on a sort of global scale, and then maybe they have some coins over, and they want to spend it in another game, and this brings them into a new game. So and we know from the data that it has quite a significant revenue uplift to have several games on the platform, and that also means for every game that we add of our own games, we can add it to this. It's also the fact that the kind of games that we do, most of them free-to-play games on the sort of PC platform, don't do well on a platform like, for example, Steam, which we love in many other respects if you're doing a premium title, because you can't track the users. There are many features that gives you unable to actually do it in a good way. And that's why most free-to-play games have their own launchers, but very few of them actually have managed to have a platform that we have been able to acquire.
Great. And that 5%, does that cover your expenses cost for maintaining and developing the platform, or how does that look?
So that's really covered by the fact that we also have other people that tie into it. So we have a good margin, a 40% margin on the business that's just from the outside.
Oh.
And that's also still maintaining the platform and then developing it.
Okay, great. I also really like the part where you want to be selective with acquisition. I think that's really important, to just go for the companies that make sense from a strategic point of view and keeping it kind of strict. But acquiring is one thing, and then successful integration, what would you say are the most important factors for that?
I mean, one of the factors is also taking it in the pace where you're able to actually integrate the companies. I think it's all depending on what your strategy is. You can have a sort of, buy everything strategy and let them sort of run through the balance sheet. But we are quite active in our acquisitions. We work very hard with having the different entrepreneurs work together, understand the strategy. And this sort of puts the pace, but it creates a different kind of upside potential. And that's what we like it. We would see it ourselves. We're not activists, but we're definitely very active. I think I would see it sort of at the portfolio manager. Are you buying an ETF, or are you buying a portfolio manager that's very successful at being a portfolio manager? If you want to put it in sort of financial terms. And I would say that we are sort of an active portfolio manager that has a few different companies that we think fit very well together and work very hard on making them fit well together and do better.
Perfect, thank you. And the final question then, looking forward, if you dare to kind of give us an idea of where you expect your profit growth to come from, will it be organic, will it be M&A? Of course it will be both, but do you have any idea at this point what these relations will look like?
I think it's quite clear that we're going to be, when all of these things come together, we're going to be the one that, in my opinion, of consolidators that do the best on margin through organic growth, through these initiatives. But we're still going to keep buying very successful companies that are growing. But these synergies are creating improved margins through these businesses that already exist over time.
Okay, that was the last question. Thank you very much, Robin, and good luck on your continued growth journey.
Thank you very much.
And now we will take a short break before we are joined by Thunderful CEO, Brian Sigurgeirsson. Thank you. Hello and welcome back, everyone. I will now introduce CEO Brian Sigurgeirsson of Thunderful Group. Please, Brian, go ahead.
Thank you. So my name is Brian Sigurgeirsson. I'm the CEO of Thunderful Group, and I would say a former game developer, because they don't let me participate in the game development projects anymore. I hired some great programmers instead of me, and that sort of was my demise. Now I'm the CEO of Thunderful Group instead, and that's delightful in itself. So what I'll do here is I'll present Thunderful Group to you, and in that I'll present the 2020 figures where they appear in the presentation, and towards the end of it I'll have a couple of slides showing you the first quarter as well. So here we go. We'll start talking about Thunderful Group, who we are, and where we come from to start. So the Thunderful Group, at the end of the year, we were around 330 people in the group. That has since risen to around 350 as of today. What we do in the group is we're a primarily Nordic company that's active in two business segments, Thunderful Games and Thunderful Distribution. If we look quickly at the history behind the group, then it actually started quite some time ago. A couple of interesting dates here are we can start with 1981, when the founder of Bergsala, which is one of the companies in the group, when he went to Japan and transformed Nintendo into an export company by securing the license to sell the Game & Watch consoles in Sweden at the time. That is 40 years ago, and we've held the Nintendo license unbroken as the distributor for Nintendo products in the Nordics. And so that was the first step into the gaming industry. Then in the mid noughties, we started publishing games as well, bringing games from Japan to the West. And then in 2011, the group that we at that time referred to as the Bergsala Sphere or Bergsala Group acquired my studio, Image and Form, and that meant that at that time, 10 years ago, we were already represented in all facets of the gaming industry: distribution, publishing, and development. In 2019, we consolidated a lot of co-ownerships in the Bergsala Group and renamed it the Thunderful Group. And by doing so, we also got an overarching strategy of taking the good cash flows from the distribution side of the business and investing heavily into the games side of the business. That was, of course, simplified as we moved all of the owners up to the Thunderful Group top company. So within a year after that, we got listed on the Nasdaq exchange in Stockholm, First North Premier, and it's an interesting ride. We have presented 2 quarterly reports so far, and it's quite exciting. If we look at sort of what our strategies and targets are, then as I mentioned, we have 2 complementing business segments, games and distribution. As you see on this slide, as of the end of last year, the games segment's share of the sales was only 5%. Now, in the first quarter of 2021, that has already risen to 13%. The share of the EBIT was 18% by the end of the year, and that has now the share of the adjusted EBITDA, which is our preferred form of measurement, has risen to 45% to complement the 55% from the distribution business. So you can see that it's converging. In terms of strategies, one of our main strategies is to invest and to accelerate investments. So we invest already in development and publishing of games. We also invest so that we can use the IPs and brands that we own and manage to create experiences outside of gaming as well. And then finally, we also invest in complementary businesses that complement what we are doing in terms of development and publishing, but also in add-on acquisitions where we sort of keep a decentralized structure. And that is obviously where we see an area of strong growth in the future, and that's one of the directions where we are concentrating our efforts quite heavily. If we look a little bit closer at acquisitions, then you could say that the developers that we want to acquire, they should be run by dedicated people. We don't want people to exit. We want them to continue working with us and become a part of the family. We want them to have, ideally, we want them to have high growth, and we want them to complement what we are already doing. We want them preferably to own their IPs so that they can expand around that. And we primarily are looking for companies within the PC and console sector. One day we are going to understand how free-to-play mobile works. Until then, we are concentrating on PC and consoles. What we can offer as a family is majority investment in the target. We take ownership and also ownership both in the literal sense, but also in the sense that we will always be involved a little bit. We never micromanage if it's a decentralized acquisition, but we are there to support management and with all issues that can arise and do arise. And finally, we offer strategic guidance on everything that they do, and I think that we already in the group have very strong developers and publishing units, so there are quite a few synergies to be had. If we go into the business segments a little bit closer, first, if we look at games, as I mentioned, we develop and publish games. We see strong growth in this segment, and this is where we invest and where we intend to grow. It's not a new thing for us. We've been developing games for 2 decades. We've been self-publishing our internally developed games for 1 decade now. And I dare say that we are best in class in terms of performance when you talk about quality. We pride ourselves on having an average of 80 out of 100 in terms of Metacritic for the latest 10 game releases, and I think that is best in class. Right now, it says on this slide that we have 12 games in development. That was as of end of last year. As of today, we have 14 games in internal development. Should also quickly mention about development that we are on a journey there where we're moving from sort of a deluxe indie space where we were a few years ago. And the deliberate journey that we've been on for the past 3 years now is to level that up into the AA space where we are now. So right now we have 4 AA games in development that are all slated for release within 2021. When it comes to publishing, we just recently acquired a German publisher called Headup to complement the publishing that we are already doing. We have published games since 2004, and we have self-published internal titles since 2010. So it's not new to us, but we feel that publishing is moving into a modern era, and we want to be ready to tackle that head-on so that we can provide the best services possible when we publish both internal and external games. Finally, on this slide it says we have invested some 60 million SEK. That is also outdated. In the last few months we've added we've almost doubled that figure. Then we have the distribution segment, which is operating in the Nordic region, whereas our gaming business, of course, is global. We're selling the games that we make and publish all over the world. Distribution is made up of 3 companies. The first one is Bergsala that I touched on just earlier. It's a company that was started in '76 and has had a Nintendo as its sole supplier for 40 years. So since 1981, Bergsala is the company that has provided the Nintendo consoles, games, and game accessories in the Nordics, and now in more recent years also the Baltic states. So of course Bergsala's business is closely tied to how things are going for Nintendo. Another one of the companies in the distribution segment is Amo Toys, which is our Nordic toy distributor. So Amo Toys is distributing leading brands to toy stores, both physical and online, in all of the Nordic countries. One of the most well-known brands there, among the very many brands that they handle, is LOL Surprise. It's a wonderful toy for younger girls that has been the best-selling toy in the world for the past 3 years. As a parent, you could probably have a different view of it. But it's one of those toys that your children just fall in love with and want to collect more and more. It's quite interesting. And also, finally, in the distribution segment, we have Nordic Game Supply, which is a leading Nordic distributor of game accessories, everything that you need for your rig back home. So it's keyboards, it's computer mice, it's gaming chairs, etc. They've sort of switched their business from starting with physical games and then moving on to gaming accessories, and we're quite early to do that. So today we have some of the very leading brands in our portfolio, such as Razer and HyperX. A little bit about why we think it's a good idea to invest in Thunderful Group, and that is we're operating on the huge and growing gaming market. We focus on high quality in terms of our games and also in how we do business. So high quality sort of permeates everything that we are doing in the group, not only in the products, but also in execution. We accelerate investments, and that is not only in mergers and acquisitions, it's also in how we approach publishing and game development. We want to invest more in bigger titles, but also in more titles going forward. We're a leading Nordic distributor in the fields where we operate, and we have a diversified business, but we have one key strategy for the entire group. Take the great cash flows from both the distribution segment and the gaming segment and invest in the gaming segment going forward. And that requires strong cash flow generation, which we manage every quarter. Finally, it's the entrepreneurs, people like me, who are leading this company forward. We understand game development, game publishing, game distribution, etc. That is what we've done for very long. I'm just going to give you a quick overview of the financials as well. For the group, we have seen stable growth and profitability for these years that we have represented on the screen here. It's not like it started going well for us in 2017. It's been quite stable for decades now. But we see an interesting growth now as we are sort of accelerating what we are doing in the games segment. Because in games, you can see that it's quickly sort of taking off. And it's quite interesting. We see that the acquired, we are growing quite quickly in the companies that we have acquired. Organically, the latest game release from us is actually in the second quarter of 2019. And that means, although it's been a long while since we released an internal game, we see very good sales from our catalog throughout the years. So it's quite interesting to see how it grows. In terms of distribution, distribution is very seasonal, so that's how it needs to be viewed. Well, year on year, you can also see that the distribution business is growing. The EBIT margin took a dip in 2020. It was COVID related, and we hope that society returns to normal. Although we could, as most game publishers, we could see an uptick in game sales during the pandemic. The pandemic wasn't worth it. We feel we wanted to return to normal as soon as possible, and I think also the distribution business is going to continue as normal. But as you can see, sales are up. Last couple of slides here. Highlights from the first quarter is that year on year we see very good profitability. So our preferred measurement is adjusted EBITDA these days in both the games and distribution segments. We've strengthened company management in several positions. We've appointed a new head of publishing as we acquired Headup. I think we brought in a lot of very good experience and forward-leaning thinking in that. And then we also appointed a new CEO in the main distribution company, Bergsala, which is something that is quite positive for us. Just if we dive down into this, you can see that distribution is standing still in terms of operating income growth, whereas games is up a whopping 119%. The adjusted EBITDA increase is over 15%, and the adjusted EBITDA increase for the entire group is around 12%. That's it from me. Thank you very much for listening, David.
Thank you very much. It's really interesting, and it makes perfect sense to take the steady cash flows of the distribution business, investing into the gems you find out there to boost your growth. We've seen it in some other examples very successfully, like taking cash flow from forestry and investing into telecom, one example.
Right.
Having said that, also being here with you representing Bergsala, it's impossible not to, think of my childhood growing up playing Nintendo games. So I really miss the Italian plumbers and the pointy-eared warriors in your presentation. But I guess I'm assuming that's a conscious choice. You want to, steer away from the old, or anyway, show that you're more than that. You're more than the Italian plumbers and pointy-eared warriors. The future is looking like this, and that's what you want to point investors' attention towards. Am I correct?
Well, it's a wonderful way of putting it. I think the Italian plumbers and the pointy-eared warriors are certainly with us every day, right? I mean, it's what we've been doing for decades, and we are going to continue doing it. In these presentations here, we want to put our own our gaming characters into the presentations, like you say, to show what we are working on, so to speak. Yeah. But fear not, they're still with us and will be so, right?
I feel relieved. Thank you. So looking at the game segment, 45% of EBITDA, the adjusted that you mentioned, what would be the greatest drivers behind this growth in the segment?
I think, the greatest drivers there is going to be acquisitions. I mean, acquiring strong companies that we've come to know during our very long history in the gaming industry. There's that. I think also finding new ways, like modern ways, as I just touched upon briefly in the presentation, for publishing. Because publishing today isn't what publishing was just a few years ago. And I think in just a few years, the role of a publisher is going to change as well. It's going to be quite interesting. It's when you develop a game, you sort of have a sniper approach to that game. You have complete control of the game, but it takes it takes a long time to develop one game, like 18 to 24 months or longer. Then when you publish games, like you lose a bit of that control, like that you have in game development, where you have 100% control of the content. You lose a bit of that control, obviously, but you have more tickets, so to speak, that you can run in parallel. And then I think, or one direction that we are moving in as well is sort of to complement that with investments in games where we talk to publishers who don't feel that they need a publisher per se, but who needs a partner to get their game out there anyway. And then I'm talking about investments in specific game projects. I think there are so many strong game projects out there today where the developer thinks that we don't need a publisher. The game is so strong, so we don't have to give away, so to speak, a bit of the revenues to a publisher. We can do this ourselves. All we need is cash to make the game. And I think we're very well positioned there because we have self-published for a decade. We understand what it means. And in that sense, we as a group can increase the number of tickets that we hold manifold.
Great. And you mentioned that you would like to acquire companies that you know well, that you've known for a long time. And that, of course, also makes perfect sense. Are there any other kind of strategies you do apply when looking for acquisition targets?
Certainly. I mean, in some cases, you're subjected to an auction, so to speak. I mean, there are multiple, there are more than one, more than you are talking to a target. I feel that I think everyone who is acquiring companies wants to be sort of alone with the target, so you have time to talk to them in peace and quiet, and so it doesn't become a bidding war and some sort of fear of missing out scenario, right? But yeah, we are obviously talking to agents, we are talking to brokers as well, and it's great because it broadens. You think that you know a lot of people until you get to know more people, so to speak. So it's fascinating also to see, to listen to people that you haven't talked to before, to see what their strategy is and so on. And then you fall in love with them and you want them to join the family as well.
Great. It sounds like it's really the road is set for successful acquisitions.
Yeah, that's what we'd like to imagine, yeah.
So thank you very much for being here and sharing your presentation. And I wish you best of luck on your continued growth journey.
Thank you, David.
And now we will take a short break before we are back with Martin Ballavaider, CFO of 11-Bit Studios. Join us then. Welcome back, everyone. Myself being born in Warsaw, it is an extra pleasure for me to introduce to you Martin Ballavaider, CFO of Polish gaming studio 11-Bit Studios. Martin, please go ahead with your presentation.
Thank you very much, and thank you for having me on today's conference. My name's Martin Ballavaider. I'm the CFO of 11-Bit Studios, a Warsaw-based game developer, self-publisher, and third-party publisher. I've been working in the video gaming industry since 2007, and I've been associated and working for 11-Bit Studios since its foundation in December 2009. So once again, thank you everyone for your time, and we have a short presentation for you, which I can see that we have overrun slightly here on the schedule, so I'll try and go through the slides quickly, and then if we have time at the end, a short Q&A session will also follow. So if I can, without further ado, move on to the next slide, please. And the next slide. As I said, 11-Bit Studios is a Polish-based game developer of multi-platform video games. So by that I mean PC, consoles, also sort of handheld devices. We are a game developer and self-publisher, and we also have a growing and developing third-party publishing business. The company, on its foundation in December 2009, listed on the secondary market of the Warsaw Stock Exchange, the New Connect market, but we have been listed on the main market of the Warsaw Stock Exchange since December 2015. Currently, we have a market cap of approximately 250 million euro. We're a very fast-growing company, and employment currently is 180 and still expanding. We're still very much looking for people to join us in all our different game divisions and operations. Next slide, please. The company was founded by 4 individuals who have a history of being involved in the game development business since the 1990s. One of the 4 individuals left 2.5 years ago for personal reasons, but 3 of the 4 founders are still very much present in the day-to-day management of the company. They comprise our management board, and of course you can see that they still remain very active shareholders in 11-Bit Studios. And of course I'm referring to Przemysław Marszał, who is our CEO, Grzegorz Miechowski and Michał Drozdowski. Next slide, please. This slide is always interesting for us, as you can see the history and the dynamic development of 11-Bit Studios from its listing on the New Connect market way back in 2010. The first real milestone in revenue development for us was in 2014 when we released the title This War of Mine, which I think really puts the company on the map in terms of game dev. And within the indie sector in particular. A growth in revenues from 2014 through to 2016. And then you can see the second big peak in 2018 when we released Frostpunk on PC initially. And then that has, of course, been followed up with DLCs, both free and pay for DLCs, as well as a console version of the game as well. So 2018, very much another milestone for us in our company's growth and development. We're very, very pleased with our results for 2020, which were 6% increase in revenue compared with 2018, which up till now had been our historic year of revenue performance. Next slide, please. Net profit of the company, again, the growth from 2014 through to 2016, and then once again from 2018 and 2020, which was just short of being another record year for us. So I think the takeaway from this slide and the previous slide regarding last year is very much that COVID really had no impact upon our business. The business continued to perform very well, even though we were all home officed and locked down from March of 2020. We were able to move very quickly into an efficient operating mode. And now, at the moment, you can say we're in a very hybrid structure performance operating mode. But sorry, I seem to have just lost the lights here. I hope you can still see me. Moving on to the next slide, please. The company is very is cash generative, as you can see from this slide, with very strong growth in cash and cash equivalents. At December 2020, we exceeded 100 million Polish zloty. So you can see from the figure, almost 108 million Polish zloty. I'd like to say perhaps sort of 2 points, because historically the company has not paid a dividend. The money has been used to finance our businesses, our internal game development, and of course our third-party publishing business. And also I'd point out that the last time 11-Bit Studios raised equity capital from the stock market was way back in 2012. So with this cash generation, we've not had the need to go back to the markets to raise any fresh equity capital since 2012. The next slide, please. In terms of our vision, we see ourselves moving up towards AAA, but we see very much that we are an alternative for the mainstream players. we regard very highly our independence, because our independence means that we're able to remain autonomous. We fully control the games, the IPs that we produce, and we believe we bring very much a uniqueness to the types of products and games that we develop or publish. Next slide, please. Again, coming back to our mission statement, meaningful entertainment. If you look at the games that we have produced internally, This War of Mine, Frostpunk, as well as some of the titles that we've produced through our third-party publishing business, in particular Moonlighter or Children of Mortar, there's always a slightly different element in our games. These are not sort of typical shooter-type games, hack-and-slay type games. We bring in different emotions, different emotional meaning or experience for players, and that's very much the direction that we want to continue moving forward. Meaningful entertainment, games that trigger emotions, encourage discussion, and that's very much the niche, the brand, the area that we want to move forward in. Next slide, please. A little bit of history here with some of the titles that we produced in the past. The first games produced by 11-Bit Studios was the Anomaly series. We're going back here almost 10 years. Well, not almost, but we are going back 10 years. The first titles were released in 2011. Small budget, 4 million Polish zloty, generating 16 million Polish zloty over the lifetime of those products. Next slide, please. This War of Mine, which I already referred to, it was released in 2014 with an initial development budget plus marketing of slightly in excess of 2 million Polish zloty. And we're very pleased to say that over the lifetime, so what now, 6 years plus, we've been able to generate revenues in excess of 110 million Polish zloty, and to date have sold in excess of 6.5 million copies of this title. Next slide, please. Frostpunk, released in April 2018, a larger budget, this time in the region of 12 million Polish zloty, and to date that has generated 130 million in revenues with over 3 million copies sold. Next slide, please. In terms of our development studio, moving forward, next slide, please. We currently have 3 development teams, each consisting of between 60 to 70 people. This, of course, allows us to work on 3 IP titles simultaneously. We are all based in the one location here in central Warsaw. Sorry, let me just clarify one point. The midterm target is for 3 teams to each consist of 60 to 70 people. 2 of the teams that we have are currently in the size of 50 to 55. And the 3rd team is smaller, and that consists of about 30 people, but in time we plan to grow these. Moving forward, next slide. And our midterm target is, the reason we have these 3 independent internal teams is to reach a position where we're able to publish our own IP once a year, once every 12 to 18 months. That remains our midterm target. Next slide, please. In terms of what we're currently working on, we have Project 8, which we hope to give a little bit more information about this year. I'll come to that at the end of the presentation. Next slide, please. Project Dolly, more information on that will also be coming out in time. Next slide, please. And Project Eleanor. Again, more information will be announced this year. Next slide, please. 11-Bit Publishing. This is our third-party publishing business. Next slide, please. And we've produced a variety of titles. Beat Cop and Tower 57 from a Polish and a German developer were quite small titles. But if you look at the 2 titles at the bottom of the slide, Moonlighter, produced by a Spanish developer, and Children of Mortar, an Iranian team actually based in the United States. These have been much larger titles in terms of their development budget and have performed very well. And we're delighted to have been associated with those titles and still to be associated with them, of course. Next slide. We plan to increase, we have increased rather, our budget on titles that our publishing business is allowed to invest. It used to be relatively modest, between 1.5 to 2 million Polish zloty per title. That has now been increased from between 5 to 10 million zloty per title. And also the goal is very much to take on more third-party publishing projects as we move forward. Next slide, please. And the midterm target for our third-party publishing business is to have a premiere each quarter. Moving forward, next slide, please. And these are some of the titles that our third-party publishing team is currently working on. Project Vitriol, we'll be saying a little bit more about that this year. Next slide, please. Project Foxhole, we'll be talking again about that this year. I'm being very coy in what I'm allowed to say and what I can't say, but that's the nature of the business. Next title, please. And Project Botan, where again we'll be giving more information this year. Next slide, please. And Project Ava, which is also we're currently working on that as well. Moving forward, next slide, please. That's it in terms of my presentation. But what I would also like to say at the end is that we're planning an investor conference on the 10th of June at 11 o'clock. Anybody who would like to participate in that conference online, please subscribe to our English newsletter. That's available on our investor relations page. My colleague Dariusz Wolak, who's also here on this call with me, is responsible for investor relations. So please do get in touch with Dariusz, who'll be very happy to take and answer your questions. And we look forward to seeing you online on the 10th of June at 11 o'clock. Thank you very much for your attention.
Thank you very much, Martin, for an interesting presentation. Great 2020 with over 22% year-on-year growth with no major releases. What is driving the continued strong performance?
We feel very much with our current catalogue that we have. We have very strong titles. We're very pleased that this War of Mine still continues to sell well, even 6 years after its premiere. And of course, Frostpunk, and its related DLCs, it's available on console. And our third-party publishing business. These are strong titles which continue to perform well, and we continue to monetize them.
Thank you. I read somewhere that there are over 400 independent gaming development studios in Poland. Could that be true?
It's a very big number, and there seem to be more and more of them appearing every day. I've heard various stories. I wouldn't deny it. It's a big number.
I see. And I don't know if you had the chance to see the beginning of this conference or listen to the previous companies presenting in the Q&As, but there's the sub-theme today is M&A and consolidation. And clearly you have not stated any strategy like that. What are your thoughts about that?
I think we'll be saying a little bit more about that at our investor conference on the 10th of June. So once again, I'd like to repeat my invitation for people to participate in that, and if they could sign into our newsletter, and we look forward to inviting them at the conference, and perhaps we may have a little bit more to say.
That's a nice cliffhanger. And also, finally, kind of a soft question, if you will. How global or integrated is industry internationally? From a Swede's perspective, we of course know everything about the Swedish companies in this sector. They are acquiring companies abroad. They are being acquired by global giants. What's your view? What do you know? Which companies do you know in terms of gaming in Sweden?
On a personal level, then I know Paradox. I've been there, but that was a long time ago. We have colleagues from 11-bit studios who have moved and are working with Swedish game developers. So we have these personal contacts, but from a business point of view, I think we're very much focused on from our own point of view. We take a very global view because, of course, we're operating in a global market.
I see. Okay. Thank you very much, Martin, and good luck with the presentation coming up and all the businesses going forward.
Thank you very much, and thank you for your time, everybody, today.
So we'll be taking a short break before we are joined by CEO Remco Westermann of Media and Games Invest. See you back in a few minutes. Welcome back, everyone. Please welcome on stage Remco Westermann, CEO of Media and Games Invest. Remco, please go ahead.
Hey everyone, so it's not Remco today, it's Paul, CFO of Media and Games Invest, yeah, let's jump into the presentation then, I would say, to page 4. So, brief introduction of also myself, Paul Echt, CFO of Media and Games Invest, studied law and finance, worked afterwards for a Silicon Valley startup company called Shopgate Inc., did some equity fundraising there, spent afterwards a few years in investment banking at UniCredit Bank, did some work with the ECM team of Kepler Chevreux, but also provided quite some debt financing to pre-IPO companies. And then met Remco Westermann, our CEO and chairman, in 2017 when we refinanced the German bond of Media and Games Invest. And in 2018, then I joined the group, and since then I'm responsible for finance, controlling and investor relations. Coming also to the shareholdings on that page. So Remco Westermann, our CEO and chairman, still holds 29% and is a major owner of Media and Games Invest. And other shareholders includes Oaktree. They came on board on our latest M&A transaction, King's Isle, which we concluded in January 2021, which was a transforming one. And then we also now have Janus Henderson on board. They came in the latest capital increase, which we concluded 2 weeks ago. So we have two very strong names on our shareholders, but also a pretty strong free float where we have Swedish long-only investors like Skandia Fonder, Atlant Fonder, but also UK investors like BMO and also from Sweden, Didner and Church Fonder. So a lot of great names which will also support us further down the road. And yeah, therefore we are well prepared also for further M&A. And again, just concluded a 90 million capital raise 2 weeks ago. So we have a pretty strong cash register now available for M&A. Coming to the MGI in a nutshell. So the introduction of Media and Games Invest, it's a clear buy and build strategy. We're running the company in 2 segments. That's media and games. And we have done more than 30 M&A transactions now since 2012. We have a market cap of roughly 600 million. We're listed on Frankfurt Stock Exchange. That's actually how we started this listed story in 2018, and then also dual listed on Nasdaq First North Premier Stockholm in October 2020. And since then, also our share price has developed quite nicely as Swedish investors understand the gaming market much better than the German ones. And therefore, we are pretty delighted to be also listed in Stockholm. The group has more than 800 employees now. And the majority of the revenues is coming from our top 10 MMO games, where the more than 50% of the revenues is coming from players more than 5 years in the game. And then on top, we also sell casual games and subscriptions. Our platform now owns more than 100 million registered gamers. And on our media segment, we have a reach of 111 billion ads, which we delivered in the last 12 months. So we have a pretty nice reach in terms of advertising to do efficient user acquisition for our games. And then we also serve 5,000 external advertisers, which is giving us critical mass to be even more efficient on user acquisition. In terms of revenues by region, North America with 61% is by far our biggest market now, followed by Europe with 28%. And as mentioned already, so we're running the company in 2 segments, where 53% in the first quarter came from the games segment in terms of revenues and 47% from the media segment. And in terms of key financial development, we will see a bit more details later on, but here we can see already that it has been a pretty good ride, very strong profitable growth over the last 6 years, with a strong average revenue growth in the last 3 years of 76%. Coming to the next slide, and here we see why we are combining media and games. So on the left side, it's a games standalone company. And a game standalone company for mobile advertising, typical game pays 10 cents per user, and in an advertising-based game can earn 2 euros per 1,000 ad views, which means that you need 75 ad views to earn back the 15 cents for user acquisition cost. While on a fully integrated media and games combined company, you pay 10 cents for user acquisition because you request much higher traffic volumes also for third parties, and therefore decrease the user acquisition cost. And you can actually double the ad income as you do everything in-house. 50% is very often taken by the agency, and therefore you just need 25 ad views to earn back the 10-cent user acquisition cost, which is a 200% higher efficiency. And that is really driving also profitability and growth for MGI. And that's also the main reason why we have been able to clearly outperform the market in terms of organic growth now in the first quarter. So on the left side, we see the media and games markets combined, which are expected to grow by 12% in the next 3 years. But on the right side, you see that we have achieved 38% organic growth in the first quarter, which was mainly driven by efficient user acquisition for our games, and at the same time also placing ads in the games. So we clearly outperformed the market. Looking now into the highlights of the first quarter, so here also in both segments. On the left side, the acquisition of King's Isle, which was the biggest to date, purchase price of 126 million, 2 very strong IPs, and a transforming character for us because we have adding 60% EBITDA on a pro forma basis. Both IPs, Wizard 101 and Pirate 101, which has been acquired, have well been above plan, but also our existing games like Trove, which was launched in South Korea, Echo of Soul became a big DLC, Arcage also released a very big DLC, driving very strong 97% revenue growth in the first quarter. While on the media side, we also did an acquisition, the acquisition of Liquid, which is a connected TV platform, and also launched the platform in Japan. Integrated all the companies which we have acquired over the last year on the media side under one brand now, which is Verve Group, and also we're growing the share of mobile games publishers within our media portfolio, and therefore we're driving 94% revenue growth in the first quarter. Looking a bit more into the MGI 2 segments in detail. So on the left side, game segment, there we did 27 million revenues and 10.9 million EBITDA, with a very strong EBITDA margin of 40%. While on the media side, we did 24.5 million revenues in the first quarter and 2.6 million EBITDA, which is an 11% EBITDA margin. And here we expect to grow to 15 to 20% within the next, or within the second half year of 2021 already. Coming now to the M&A strategy of MGI. So as mentioned in the beginning, it's a clear buy and build strategy, but also combined with very strong organic growth. And so we're buying mainly inefficient targets. Typical target size is 5 to 40 million. We fully integrate the companies. That differentiates us also a bit from other peers because we believe that we can realize much more cost and revenue synergies by doing that. And then the third pillars, that's really revenue synergies, so increasing organic growth, post-acquisition, which is done due to efficient user acquisition for the games, internationalizing the games, but also on the media side, selling the products globally, and therefore driving nice organic growth post-acquisition. And our typical M&A strategy is that we have done also out of the 30 acquisitions, we did roughly 25 distressed companies, so companies with a negative EBITDA. And there we always had the rule that we want to earn back the purchase price, including transaction cost and burn rate within 24 months. Historically, we have been below 18, and we have also lined out some cases in our company presentations, which you find on our website. So that's a pretty strong pillar. But more important is for the future, and that's what we're focusing now, is also EBITDA positive cases, where we still want to be conservative, not paying more than 6 times EBITDA. Also maybe go to 8 or 9, but then there needs to be clear synergies so that we can achieve these multiples and stay away from bidding processes, and therefore typical target size is 5 to 40 million revenues. Looking now into our M&A strategy, so what we see here, a clear shift from EBITDA negative to EBITDA positive cases. So we see the top 5 M&A cases which we have lined out here. It's 3 gaming companies, 2 media companies, and all of them actually profitable. Coming now to the financial section, and here we see in the first quarter financial highlights that we have grown the revenues by 96% year-on-year to 51.9 million, while we were driving the EBITDA and growing it by 127% to 13.5 million, which were increased because we increased revenues, but at the same time increased the personal expenses at a much lower rate, which were driving then an even stronger EBITDA growth than the revenue growth, while also adjusted EBIT grew by 173% to 9.3 million, and operating cash flow grew by 83% to 11.3, mitigated a little bit due to a working capital impact from the Liquid acquisition, but nevertheless still very strong operating cash flow. Looking into the summary of the annual financial performance, here we see that we have shown very strong profitable growth over the last 6 years, reaching now 166 million revenues and 37 million EBITDA on a last 12 months basis, showing an average revenue growth in the last years of 76%. We diluted our EBITDA a bit in 2019 as we also acquired the media companies there, which were then driving further strong organic growth also for the games department, so it was a good decision to do it. Nevertheless, we expect now to go up to 25 to 30% for the full year 2021 already in terms of EBITDA margin, as KingsIsle is just included for 1 quarter here, and also the media side shows currently strong increasing EBITDA margin. And that's what we see already here. So first quarter in terms of revenue was close to its all-time highs, reaching the 52 million revenues. And on the EBITDA side, we also closed the first quarter in terms of all-time highs, reaching 14 million EBITDA, and already a 26% EBITDA margin, which also can be seen as a kind of guidance for the full year 2021. What we started also in the first quarter of 2020 was a segment reporting, and so to show more transparency also to the outside, and therefore we have introduced games and media segments. On the left side you see very strong revenue growth of 97%, combined with also a strong EBITDA growth from 5 to 11 million. And even even more important is also that we even increased the profitability from 36 to 40%, really showing economy of scale and due to increasing critical mass. On the media side, we also were showing very strong growth in terms of revenue, 94%, where we were also tripling the EBITDA from 1 to 3 million and increased the EBITDA margin from 7 to 11%. And here we target 15 to 20% for the second half year of 2021 already, as we're scaling the revenues quite nicely and the personal costs and the fixed costs are pretty constant, and therefore driving higher EBITDA margins now going forward also for the media segment. In terms of operating cash flow and CapEx, here on the left side we see the operating cash flow development. So we started with 300k in 2014 and have reached now more than 30 million actually in the last 12 months ending Q1. With a strong free cash flow of 25 million, which is achieved to a limited maintenance CapEx of 6 million on a last 12 months basis. That's what we see on the right side, which is further investments into our IP-owned games, so content updates, DLCs, but even sequels. And compared to our operating cash flow, it's still limited, and therefore we're driving a very strong cash conversion. And on top, we also have expansion CapEx, which includes investments into M&A, but also into new game IPs and new game licenses. And there we have the KingsIsle acquisition in Q1, which led to a pretty high cash out. Nevertheless, also invested into further organic growth projects like game IPs and game licenses. And in terms of net leverage development, so the risk profile of MGI, we see here that we have started with 7x in 2014 and then traded between 2 and 3 over the last 5 years, going up to 2.7 in the first quarter due to the cash out for KingsIsle. But now including the capital increase of roughly 90 million, we have pretty nice delevered to 0.2. And that's also bringing us already to our financial targets. We have set these 2 years ago already and want to grow with a revenue CAGR of 25 to 30%. Looking at the first quarter, we can clearly see that we have outperformed that quite nicely with 96, with a strong underlying organic growth of 38%, EBITDA margin 25 to 30%. Here we are well within the target with 26, EBITDA margin target 15 to 20, 18% achieved in the first quarter, and net leverage is even below the target, but that will also increase as we will use some of the cash which we have now in the bank for further M&A growth. That already brings us also to the outlook for 2021 and beyond. So MGI has now announced the strongest organic growth pipeline to date, with 2 mobile games, Heroes of Twilight, Golf Champions, Desert Operations, one of the games which we're currently porting to mobile, Skydome, a PC MMO game, and our strong enterprise solutions also in terms of our software as a service part for our ad tech stack. And then yesterday also the IDFA solution has been announced, which enables us to really do efficient user acquisition, despite the fact that Apple introduced the IDFA thing. And yeah, I think that brings us already to the Q&A, and happy to receive some questions.
Thank you very much, Paul Echt, for presenting. Really interesting indeed. You epitomize the kind of M&A-driven machine with a clear strategy and clear boundaries on your strategy. Still, you showed an impressive 38% organic growth, citing efficient user acquisition and synergies between your verticals as driver of your growth. Could you elaborate a bit on that, how your media vertical supports your gaming companies?
Absolutely. So it's 2 pillars for the game segment. It's really efficient user acquisition, which is driving a lot of organic growth, as we can do much better targeting, as we have a lot of data now in-house. And at the same time, we also have reduced user acquisition costs. And that combined with further content updates and bigger DLCs, as we have ramped up our game development department quite a bit over the last 2 years, is a very strong driver of our organic growth in our game segment. While on the media side, we also can place additional ads in the games, and therefore also seeing pretty nice organic growth on that end. And there is also a lot of new game publishers like Zynga, King, quite a lot of EasyBrain, a lot of bigger names which have recently joined also our platform and doing and monetizing their games within our software as a service tools. So placing ads in their games to monetize their games via ads, and that is also driving additional growth. And I think there's a lot of trust to MGI from these game publishers, because they know that we have the know-how in-house and really know what we are doing there. And therefore, they're deciding to do the monetization of their games with MGI.
Perfect, thank you. And speaking about M&A, how do you find your targets? Do you have a very structured process, or is it more sporadic? What does that look like?
So we are in the M&A field now for 8 years, having performed more than 30 M&A transactions. I think it's 35 now, all in. And therefore, every week we get 3 to 5 targets offered. But most of them we decline because it needs to be high quality, and we have a pretty clear strategy on that. So it should be MMO games or also mobile games with an RPG focus, so that we have long recurring revenues. And we are pretty conservative, so we stay away from all the bidding processes. But as we have done so many M&A transactions in the game space, but now also on the media side, we have a pretty strong network, and people know that we, being a responsible party, doing good deals, but also fair deals. And I think that is really driving now our pipeline quite a bit. And therefore, we have more and more companies approaching us who want to join the MGI story. And the share is also a little bit our weapon, I think. So more and more people see also additional upside if they join us and maybe get partly paid in shares. And that's also part of the story, I would say.
Okay. And what do investors have to look forward to from MGI in the coming year? Any specific things you would like to stress a bit more?
I think it's further tailwinds in terms of organic growth. We have the strongest organic growth pipeline announced now in terms of game launches, which we had in the history, and combined with further tailwinds also from the media side, where we're seeing a lot of advertisers also from the travel industry coming back, increasing their the advertising budgets again. So I think MGI, with its positioning, is really prepared for strong organic growth. And then we also plan to do 3 to 5 M&A transactions this year. So I think there's a lot of things to come for the year.
Definitely a lot to look forward to. So I would like to conclude by, on a personal note, saying it's very appreciated that you have listed your company here in Sweden. Really interesting that you are, contributing to this hub of gaming companies and the investors that are active in this space. And once again, thank you and good luck on your journey.
Thank you very much. Bye, everyone.
So once again, short break before we are joined by Erik Dale Rundberg, CEO of Qiiwi Games. See you back in a few minutes. Welcome back, everyone. It's now time for Erik Dale Rundberg, CEO of Qiiwi Games, to give his presentation. A warm welcome, Erik. Please.
Thank you so much. Happy to be here and present Qiiwi Games and our strategy and our pipeline of 2021 and overall company structure. So let's start. I don't see the slide changer. Yeah, now I see it. So our business idea is to develop and publish mobile games aimed at people who live a daily life, so-called casual gamers. And our vision is to gild people's everyday lives and moments with our games. So a short history about Qiiwi Games. We started in Alingsås in 2012 when we created a trivia game called Quiz Me that reached very good success in Sweden. It was the first trivia game where you could challenge another player over the mobile cell network, playing 1 versus 1 and in league format. And it topped the charts here for a while. That led the way to continue our journey in focusing on developing word games and some more trivia games between 2013 to 2016. Where we launched a game called Words in a Pick, which gained more success in the Nordic and Europe countries. And we also released several other games under that franchise. We also transitioned our development to be 100% in Unity in 2014. In 2017, we listed the company on Spotlight stock market. And we also started the global launch of, back then, our biggest game project, which is our mobile trivia game called Backpacker, that we had developed for several years. 2018, we did our first acquisition of the Cypriotic game studio called Milliplay. And Milliplay had been focusing on developing match-3 games several years before that, and they had built their own match-3 engine that we call the K3 engine, and that is the engine that we build all our match-3 games on nowadays. In the late 2018, we established a new strategy that we call the 2019 to 2021 strategy, which basically consists of three parts. We wanted to create a better risk diversification between creating own IPs and games under famous brands. So we established a business area that we call branded games. Secondly was that we wanted to be responsible for the whole life cycle of a mobile game. Before this strategy, we were in publishing relationships, but we wanted to control the whole life cycle of a game to be able to get the best long-term margins for the company and also create better experience and know-how inside the company, which we believe is important for the long run. And the third part was to create the games going forward, focusing on metagaming mechanics, and I will talk a bit more about that on a later slide. 2019, we signed our first agreement within the branded games business area for the brand Hell's Kitchen. Our new word game, which was based on the metagaming mechanics, launched in October, and that is the most successful game from us up until now. We started the soft launch for the new Hell's Kitchen game in late 2019, and we also signed a second cooperation agreement within the branded games business area for developing a game under the brand Coronation Street. We reached positive full-year EBITDA in 2019, and also positive net result and cash flow for the Q3 and Q4 quarters. In 2020, we reached full-year sales of 108.4 million SEK compared to 24.8 in 2019. We reached an EBITDA of 6.7 million SEK compared to 1.3. So we had a good growth 2020 compared to previous years. And that revenue growth is primarily driven by 2 games, which is Worthington and Hell's Kitchen. We started the global launch for Hell's Kitchen in May 2020. And during the summer, we signed 3 new deals in the branded games area. It's to develop games under the brands Kitchen Nightmares, Midsummer Murders, and MasterChef. And we also started the global soft launch for the game Coronation Street, the deal that was signed late 2019. In 2021, Q1 sales reached 25 million SEK compared to 24 2020. And just worth noting there is that we had a positive effect of the corona in 2020, and we also had very good momentum with Worthington and also a good start for the Hell's Kitchen game during that period of time, 2020. And in 2021, we have been focusing a lot on developing our strongest pipeline for the history of the company here in 2021, which we have now started to get to launch those games here, and I will talk more about that. We signed also a new agreement within the branded games business area for a game under the brand Extreme Makeover Home Edition. We completed a directed new share issue in end of January of approximately 66.5 million SEK. We started trading at Nasdaq First North on the 16th of March. We're in past 20 million players, and we now just recently started our soft launch for the new game Midsummer Murders, Words, Crime and Mystery. So a little bit about our organization. We're based in Alingsås, Sweden, where we are 8 people, focusing more on business development with management team, and we also have senior developers and designers helping and leading our Cybernetic studio. The board is also in Sweden, totally. In Nicosia, where we have our subsidiary, we are 45 people at the moment, and we have been growing there. Looking back 1 year, we were around 17 people there. So we have really been growing the last 12 months in Cyprus to be able to have this strong pipeline of new games we have now. In Cyprus, we have primarily designers and developers. We have also resources for our growth team, user acquisition, social media, and also business intelligence resources for data analysis. Our target group is casual gamers. It's primarily women 35 years up. They are in our games today. The split is around 70% women and 30% men. They usually play medium to short sessions, around 15 to 40 minutes. And our revenue distribution is, looking at the last quarter, we had 14% of revenue coming from in-app purchases and 86% coming from ads revenue. So we are very ad-driven revenue in the current business. We had in Q1 daily active users of 308,000, monthly active users on average 2.03 million, and on average revenue per daily active user at 0.83 SEK. Here's a picture showing our gross sales development per quarter and for the last years. And what can be seen here is that in the end of 2019, when we got games coming out under our new strategy, Worthington and also Hell's Kitchen, we have seen a really good effect on that, and that is also the games that have been creating the growth in 2020. And from 2020 summer and going forward to where we are today, we have been focusing a lot on developing these 3 new games for the branded games business area that is now very close to soft launch, all 3 of them, and Midsummer Murders have already started that. EBITDA development for the same period as a sales development, and worth noting here is during the Q4 2020 was a very heavy user acquisition investment quarter for us. We invested a lot of our surplus from our games into more user acquisition in primarily Worthington, but we also had 3 new games that started soft launches and global soft launches, which short term drives more user acquisition investments that later on creates better margins and positive EBITDA. So that is how new game launches affects the short term EBITDA per quarter. Looking just fast on the global development, it is expected to grow with around 15% yearly, regarding how much purchases that are being made on the App Store and Google Play, like in-app purchases. So this is not including any ads revenue. It is expected to be doubled between 2019 up until 2024. And looking more closely between 2020 to 2021, it is expected to reach around 23% yearly growth. And if we look a bit about advertising revenue, how that is predicted, which is currently a very big part of our revenue streams, but advertising revenue is predicted to rise going forward when more and more gamers are becoming mobile gamers and more countries and geos gets better mobile networks and possibilities to have better smartphones, etc. In-game ad revenue is predicted to grow faster than direct spending in the next few years, and Qiiwi is very well positioned into this ad monetization mechanics of casual games, and that means that we are able to more or less monetize through with 100% of our player base, and our games are also built in a way to let the players watch ads to get rewards in the games and to progress in them, which they appreciate a lot. Here's just a summary of some of the top performing games in our currently focused genres. So we have Candy Crush, Homescapes, and Wordscapes. Candy Crush Saga and Homescapes is match-3 games, where Homescapes is more metagaming storytelling focused, and Wordscapes is a word puzzle game similar to Worthington, but without metagaming and storytelling elements. So how do we generate revenue? We have our games free to play, so they are completely no cost to download. So we need to create the revenue when the players are inside the games. So they can either do in-app purchases, where they get virtual currency in the games to progress faster and get special items and objects. And they can also use rewarded ads to watch ads to get rewards and progress easier in the games. So on the left side here we have Hell's Kitchen, in the middle we have Worthington, and on the right side we have Midsummer Murders. So our strategy is focus on casual gamers. We do our games based on metagaming mechanics. I will talk a bit more about that next slide. We do our games, we have a good risk diversification between own IPs and branded games. We are very data driven, so everything we do in our games and balance them is decided by the data we have in the games and by doing A and B testing. We do a lot of cross promotion to really let the players stay as long as possible inside our bubble and our network. We do work with M&A. We do see several M&A possibilities going forward, and we believe that can fuel our growth more, and also enter new categories that still targets casual gamers, which is the target group that we still want to focus on. Our long-term goal is to become a business leader of creation of mobile games targeting casual gamers. So branded games, we focus on strong international world-famous brands as we see it. And when we pick a brand, we really believe that the brand have a fan base and virality by using it inside a game that will really give the game an uplift in normal. If you compare that to working with creating a game under a completely new brand, that should be an own IP. So with a famous brand, you get much easier to market the game, and you also get a better virality with people that finds the game on the stores and downloads it, which basically is free installs. We reuse a lot of our earlier development and designs for these types of games to be able to create them pretty fast. So far, we have entered into 6 agreements. It says 5, but that's wrong. So we have entered agreements for the Hell's Kitchen brand, Coronation Street, Midsummer Murders, Kitchen Nightmares, MasterChef, and Extreme Makeover Home Edition. So we have a very strong pipeline of branded games in our portfolio going forward. And there is a lot of opportunities here to create more games on, and we get contacted by several license owners on a weekly basis regarding possibilities for new projects. So it's definitely a segment that where we can grow if we want more, but we also want to continue doing own IPs so we can keep that risk diversification in a good place. So metagaming mechanics, it basically means that there is more things to inside our games than just to puzzle a word or solve a match 3 level. So you always have some story to follow along, and you also have different layers to customize in the games. And that can be to customize a house or to customize a restaurant or to travel the world and a lot of different things. So that is what we believe engage players more, and it's very popular against our casual gamers audience group. And we believe that there's a good growth possibility to further grow with this metagaming storytelling focus into other categories of games where we are active today. So that is something we do look a lot into also now. Our work process, when we develop a game, it takes around 6 to 9 months before we can start a so-called soft launch, where we activate the game either in a locked market, like 1, 2, or 3 countries, or we activate the game in what we call a global soft launch. And it all depends on how fast we want to test the game on specific markets, more or less. And when we feel safe with the KPIs and metrics in the game, we can start the global launch, which basically means that we increase the marketing spend, which means that we get more players. And as long as we do that, we get more and more data and can better and better optimize the marketing spend and do updates of the games, live operations, add more content, do seasonal events, etc. Which means that we over time have the goal to decrease the overall marketing spend, and then sustain and optimize and bend the curves to get a really good margin revenue-wise compared to marketing spend. So a quick view of our own IPs in our game portfolio. We have Wordington, we have Puzzleton, which is based on the Wordington engine and story, but instead of having word puzzles, we have match 3 in that game instead. We have Backpacker, which is a world adventure trivia game. We have Words in a Pick 1 and 2, and we have Magic Gifts. And here is a picture of Wordington, some story images. And here is our game portfolio of branded games. So currently we have Midsummer Murders, which is a word game made together with All3 Media International. And it's based on the world famous British crime series Midsummer Murders. It has started soft launch now, so we're in our 2nd week now, so it's very recent. Kitchen Nightmares will be a match 3 game based on the reality series Kitchen Nightmares, also to get done together with All3. It's planned a soft launch here in Q2, so we are aiming for June for that game to start soft launch. MasterChef, match 3 game, made together with Endemol Shine Group and Banijay, based on the world's most successful TV food entertainment program. And that is also planned to start soft launch here in June. And then we have Extreme Home Makeover, which is made together with Banijay Brands, and it's based on the famous TV series, and will focus on renovating and designing houses and apartments for families in needs. Soft launch start planned for end of 2021. Then we have Coronation Street, based on a very famous soap opera in the UK, the world's longest running soap opera, but it's very UK concentrated. So that game is more or less for the UK market. And then we had the Hell's Kitchen game, which was the first branded game that we launched, which is based on the reality series Hell's Kitchen, made together with ITV, both Coronation Street and Hell's Kitchen. There's some images from the Midsummer Murders game and Hell's Kitchen and Coronation Street. And Coronation Street is a game where we really reused a lot of our previously made development. So that is a game that is built on the Worthington engine, but we have swapped out the signs to fit the Coronation Street theme and characters and story. So summary, we have 5 games in global launch with associated live operations that we work a lot with. 3 games in either global soft launch or locked soft launch. It's Midsummer Murders, Puzzleton, and Coronation Street that work in that phases. And development in progress is MasterChef Kitchen Nightmares and Extreme Makeover Home Edition. So this combined gives us the strongest pipeline of new game launches in a single year for Qiiwi. It's a really big ramp up from our previous years. And we really expect that this will give good revenue injections going forward, as long as, of course, the games perform well, etc. So just summary, we have a good risk spread between own IPs and branded games. I've talked about all the games that is in development. We are very cost effectively with our subsidiary in Cyprus, where we primarily scales with more resources. The market is growing rapidly, as pretty much everyone knows here, and we target a loyal target group, casual gamers. We work more with M&A possibilities than ever before, and we have identified several possibilities for us there that we're working on, and we believe that this will fuel growth and group strength for the long run. But of course, we also work against prioritizing quality in these types of deals. But yeah, we're working a lot on that. And also, to conclude, we control the entire life cycle of a mobile game. So that means that we have everything in-house, and we believe that will provide the best long-term return for the company. And that was all I had for the presentation here.
Thank you very much, Eric. Thorough presentation indeed. Impressive development. And I just wanted to conclude all the best on your continued journey. And thank you very much once again for attending the conference today.
Yes.
Goodbye.
Thank you.
So, a short break before we are joined by Daniel Hasselberg, CEO of MAG Interactive. Please join us again in 1 minute. Welcome back, everyone. It is now time for Daniel Hasselberg, CEO of MAG Interactive, to present his company. Welcome.
Thank you. Yes, so I'm Daniel, I'm co-founder and CEO of MAG. We're a mobile games company from Stockholm. We've been around for about 10 years now and have 100 employees here in Stockholm and in our Brighton studio in the UK. Our games have been downloaded more than 350 million times during the years, and we are targeting primarily casual gamers. So basically anyone who's not calling themselves a hardcore gamer is our audience. And we are in the free-to-play space, so our business model means that you can download and play our games for free, and revenues are generated from in-app purchases and advertising. And as a free-to-play developer, It's really the combination of both the creative part with creating fun and engaging games, and the data part when it comes to optimizing and customizing the game experience. That's really key. And on top of that, the marketing part is extremely important as a free-to-play developer, because you are acquiring users and you pay for that, and they can play the games for free. So you need to be on top of your prediction models to make sure you can early predict if the lifetime value of those customers will exceed what you paid at the acquisition point. So we've invested a lot during the years in infrastructure for doing these prediction models and building tools for our marketing team to make sure they can really spend marketing dollars where they will come back with a profit. I'll come back to that shortly. So mobile games is a massive industry. It's more than $100 billion opportunity, and it's the biggest entertainment industry in the world. And here we see a breakdown of MAG's revenue. So 36% comes from the US market, so that's our most important market, and what we always look to when we build and design new games. We also have a fairly large footprint in Western Europe, and then you see the other 20%, it's a very global spread. Just thanks to Apple and Google, you have the App Store and Google Play Store basically on every mobile phone in the world. So 3 to 4 billion people that are the kind of potential audience for the games. But we continue to be very focused on the Western markets. That's where we've proven our strength. Over this last decade, we really built a strong portfolio of games. So we continuously launched games during the last 10 years, which means that we now have games in all various parts of a game's life cycle. And that builds a robustness of the business. So having both games that are very mature, steady earners, and then the newer games with more growth potential. And on a typical day, about 2 million people play our games, and they spend more than 1 million hours playing them. So it's a very highly engaged audience. So sometimes the game, the word casual can be a bit deceiving. It's a very enthusiastic crowd that play and spend a lot of time in these games. It's more that the games are very accessible. That's what casual refers to. So if we look a bit at our game portfolio, how we can divide it in terms of maturity and revenues, we have what we call our game catalog, which are more mature but slightly smaller titles where we don't invest much time in terms of new development or marketing investments. And then the very important part with our evergreens, which are games that were launched several years ago, have passed their peak and are now at a very significant revenue and daily active user base, and games that we can see that we can count on for many years to come in terms of driving revenues with a very high profit margin. So those 4 games we see here in the evergreen segment are really important to us. And then we have the new games where we continuously have development of new products. So again, in different parts of the new development cycle. So we have everything from early concepts and prototypes to games that we're currently testing in the market. And how we approach this is that we work a lot in stealth mode, so testing things that is not under the MAG brand yet to make sure we can really be in touch with the audience and get data on how well these games are performing at an early stage to make sure we know when to stop or when we should continue and double down. And that's also reflected in our accounting principles. So as long as games are not at the soft launch stage, we don't treat this as investment and put it on the balance sheet. So if we stop games early, that's not going to be seen in our profits. And then, of course, we have the growth segment. These are the games where we invest most in terms of building new exciting features and events, and that's also where we invest the majority of our user acquisition money. So looking at this picture, we see 3 in-house developed games that have been launched 2018, 2019, and 2020. So it's Word Domination and Wordsea and New Quiz Duel. And the more recently acquired games that came into this financial year. So our year goes from September through August. So we have Primetime that came in earlier in the year and Word Mansion that came slightly later. But I really think this is a very balanced picture of a game portfolio. So a few words about these acquisitions. So Primetime is a live trivia show that goes live. So for the last 3 years, 8 p.m. you've been able to start your Primetime app and take part in this live trivia show where the winners get get to earn real money. So it's a very exciting trivia experience. And we see that a lot of players play together with friends or family, even on the same phone. So it's a very social experience that we really like. But the big kind of driver strategically for us when it came to this acquisition was that we saw a good fit with a new exciting trivia format, with us already owning the biggest mobile trivia game in Europe, which is New Quiz Duel. So the integration of live trivia into that game is what we're really excited about seeing happening now. So here are a few pictures where you can see what it looks like. So for Quiz Duel, Germany is the most important market. So Quiz Duel as a game has been downloaded more than 100 million times, and about 40 million of those downloads is from Germany. So it's a very big established brand in the German market. ITV has licensed our IP, Quiz Duel, and they have run a TV show on the biggest TV channel in Germany for, I think, 6 or 7 seasons now. And that's why getting the live feature out for the Germans is the most important part for us. And here we can see what it looks like a bit in the studio and in the game. And if you play currently in the German market, you see this live tab, and you can play several times a week. The live show goes on. You can play. Currently, we run it 4 times a week, testing out the formats and the show hosts. And we have between 10 and 20,000 viewers each show right now. The monetization here is slightly different from other game modes in our games. So on top of the in-app purchases, where you can buy lifesavers in case you get a question wrong, we also have sponsorships. So this is the same business model that we've seen worked successfully for Primetime. So we have big brands coming in and are kind of the presenters of today's show, sometimes with specific prices as well. So in this particular example, you see Storyteller, which is one of the sponsors we work with in the German market. What's still coming shortly is the real money prices. So we have that in the Nordic countries with Primetime, and that's something that's in the works now for the German market. So as soon as we have the real money in place, then we'll start kind of market this feature more heavily, both inside the game and outside the game into the German market. So a very exciting opportunity for us to build a completely unique trivia product in the marketplace. Apprope is another acquisition that we closed now in January of this year. So this is a small Stockholm-based studio that now moved into the MAG headquarters. It's a 2-man studio, but same as MAG, it's been around for almost 10 years. So that means that they also have a portfolio of games that are in different parts of the game life cycle. So a very profitable portfolio. 2 of our evergreen games are now coming from the acquisition of Apprope. But what also made us enthusiastic about this acquisition was the game engine they built for narrative and decoration games. So this is a kind of a subcategory of games, if you will, that have been very popular the last couple of years, starting in match 3, but now going into other categories as well, where you follow a story that makes it engaging for the player to continue playing, and the progression is visualized as a kind of decoration of in this case, a big house, but it could be other things that you kind of make look better over time, and that's the sense of progression as a player. The first game built on this engine is called Word Mansion, and we've seen that grow really well since the acquisition, and I think people outside us also noticed some great traction on the charts, among others in the US market. What we've also seen work really well with the acquisition of Apprope has been the fast integration into MAG's core systems. So we now have the game analytics platform is hooked into their games, so they can use the same tools and dashboard to analyze the games, and we can easily benchmark between different games in the MAG portfolio, which is a good strength. And also on the user acquisition side of things, that we can make use of all these prediction models that we built, also apply that on the Apprope games. So going up one level and looking at the top line revenue for the company, this is what it's developed over the last couple of years. We see 9 quarters here, and a continuous growth, and a lot of this is connected to our focus on average revenue per daily active users. So it's basically the measure of how effective are we at monetizing the player experience. And we've really done this across the entire game portfolio. So all the teams have really taken new steps to improve how the games work and have more engaging events that can drive more in-app revenue spend and so on. So it's been really fantastic for us to see as a company where we focused on this and really made it happen continuously for now more than 9 quarters. You can also notice the kind of COVID related bump there a year ago, where we got a lot of traffic coming in the time of lockdowns. Our last reported quarter is December through February, so that's our Q2, where we could see a 44% growth in revenues year-over-year. And we were also able to invest more in user acquisition, so that's a good thing for us. So we were able to invest 22 million versus 14 the year before. And a very important measure for us is what we call game contributions. It's basically what we have left when we have paid for the user acquisition that quarter, and also pay the platform fees to Apple and Google that take a 30% cut of the in-app revenues. Now we're seeing some movements in that area. So Google has now, from this summer, they go down to 15% for the first $1 million every year. And as I think many people are aware of, there's a lot of movement here. So potentially this could improve. The tax rates might go down if you refer to tax. The in-app revenues in our games went up 74% year-over-year. So that's again a testament to the team's really strong work in improving monetization. And we ended the quarter with more than 10 million SEK in EBITDA. The user acquisition dynamics is something that's very important to understand, as of course as a free-to-play company, but also as an investor in free-to-play companies. As you have a free game means that you get 0 back the first day after acquisition, and then you have a time where you kind of retrieve or recoup the investment, and then you see the profits coming over time. So this is to conceptualize what it could look like when you grow a game and continuously increase your investments every month or every quarter. Will take a while before the revenues catch up and eventually start helping you add to the bottom line. Our ideation process is something we continuously work on as a company to make sure we can learn from how we make games and how we get games to market in an efficient way. And here, of course, it's really important to be efficient and shut down projects that don't make sense. And one thing that we do, which I think is pretty amazing thing with how we can approach mobile games, is that we do in this pre-production step you see in this picture, do mock-up of games before they even exist, to try that and market those games to a potential audience to see click-through rates on ads and see how attractive this actually is, so you don't build games that will be very hard to market. And then you can even cancel projects before you start them, which is of course a very efficient way of working. Typically our path from idea to a soft launch takes us between 6 and 12 months and costs less than 10 million Swedish kronor. Something else that we've been working on is to make sure we build reusable technology. So we have a common backend system for all our games to make sure we can reuse the same matchmaking and A/B test systems and event engines and all kinds of components that are actually very similar in multiple games, which means that when we approve them, all of the games can benefit. But also down to a game level, we are working more and more on making these reusable software components that makes us become better and more efficient at making games, but also makes it easier for one game that does a successful improvement to translate that improvement to one of the other games in the portfolio. Same thing with analytics tools and live operations tools, of course. So just summarizing, looking ahead into the future, we have a very balanced portfolio, both this kind of stable evergreen earners and the exciting growth opportunities. We have a strong financial position with 75 million in the bank, which means that we can both invest heavily in user acquisition when we see opportunities and look at more M&A targets. The common infrastructure is a key thing here for building a long-term company. We've now been around for 10 years and we're thinking about the next decade. So make sure we really invest for the long term. And of course, the recent acquisitions, Primetime is just about now to have the live feature with real money coming out in QuizDuel, and that's when that journey begins. And with Apprope, that's only been with us since January. There's of course tons of opportunity to work together for the coming years here as a part of MAG. So with that, I think I can start taking some questions.
Yes, thank you very much, Daniel. Impressive indeed. So business revenue increased 44% last quarter. What was the driver between the increased revenue per daily user?
Yeah, so it's basically multiple things in parallel. We are working a lot with the events in the games, so that's kind of time-limited game modes that show up and create a sense of urgency for the player to take part in that, and that's we seem to be a very efficient way of driving both ad revenues and in-app purchase revenues. It's something you see the timer going down, you really want to engage with that before it goes away. So those events have been added to multiple of the games, and we see them continuously improve. But then it's also the product mix. So all the newer games we have in the portfolio have significantly higher ARPDAU than the average. So when they become a bigger part of the overall, you also see the average climb up.
I see. And what would you say are the most important characteristics for a free-to-play game?
The key thing that we start with, and I think most companies start with, is retention. So since it's free to download, you need to get people engaged and spend a lot of time with you, because there's always going to be a relation between time spent and money spent. So when we look at games and evaluate early on, it's kind of how many days and hours will we get from the players on average in this product. And if it's not good enough, we need to cancel it or rethink it, because engagement there is really key. We look at games like Russell that we launched 9 years ago. We still have a massive user base still around, and that kind of retention is of course a dream for a company to build around.
Yeah, definitely. And speaking about increasing revenue per user, have you considered season passes, or perhaps you have season passes in your games?
We have something that's fairly similar. So in Word Domination, for example, we have a monthly subscription, and through that subscription, when we have events running, you have kind of parallel price ladders, so you get better prices if you are a subscriber rather than not being it. So it's pretty similar, but instead of being kind of buy one pass at a time, it's a continuous subscription. And we see the engagement in the subscribed user base is amazing, where a lot of people play more than 25 days per month.
And you mentioned that you're looking for potential M&A targets. Could you elaborate what kind of companies you're looking for, and what are the most important aspects for a potential target?
So say in terms of price range, we're pretty open. We're definitely not limited to the cash we have in the bank, so we're looking at some things that are much bigger and some are slightly smaller. But I think the key part is to figure out, is this something that will benefit MAG for many years to come? We're not just looking for adding some EBITDA. We're looking for something that kind of makes sense for us logically. I think you can see with our recent acquisitions that they fit really well strategically with what we're doing. And then it's about kind of founder fit. Do you find people that we want to work with, and do they really want to work with us? And I think the best acquisitions is when you are the best buyer. That's the position we want to come to, so they can see why it makes more sense to sell to us than anyone else. Then you can both get a good working relationship and also get a good price, I think, as a buyer. And that could take time. So that's why we've been doing acquisitions all the way back since 2014. Sometimes 2 in the same year, and sometimes nothing happens in a year and a half. And that's natural because the timing needs to be right. It's a huge thing for a founder to sell their company. So the stars need to align, and sometimes they do, and sometimes it takes more time. So we have a lot of parallel dialogues going on. And when it makes sense, it's going to happen again.
Good. So as a final question, what do we have to look forward to from MAG Interactive in the coming year, if you would like to stress just a few things?
Yeah, I mean, things that we keep coming back to a lot is the potential of our growth games. So that's what's most obvious to me, at least. What's going to happen with QuizDuel, where we have a very large audience. So every new improvement we do to that game has a very big effect on the bottom line for the company. And then, of course, with Apprope, it's very exciting to see what we can do with this engine. We can do more with Word Mansion and more games that can come out of that. And Words, which is our other big growth title, which have really, really strong KPIs. And it's all about making sure that the marketing work well, and you can see really strong growth when that really resonates well with the market. So those are kind of clear that for everyone to see right now, and that we can also see obvious opportunities. Then I think as a game maker and entrepreneur, you're always most excited about the stuff that's not even out there yet, like the new games we're building on that's going to be 10 times better than everything else. Yeah. But that's part of the nature, I think, as an entrepreneur, that you dream about what's not there yet. But there's enough opportunity you can already see that to be excited about. So.
Oh, I think that's a perfect cue to end on. Thank you very much once again, Daniel, for taking the time to make the presentation, and best of luck on your continued journey.
Thank you so much.
We will now take a short break before we are joined with a panel of experts to have further discussions. Please join us again in a few minutes. Welcome back, everyone. I now have the honor to present to you an expert panel with some of the savviest people and most experienced people in the gaming industry. I will start with a brief introduction of each and every one of them. I'll start with Filip Ekeby, who is with us on video. He's an investment manager with Modelia Equity, focus on small cap, tech, and gaming. Also previously a business developer with THQ, or Embracer Group as we know them as today. Moving on, a familiar face. We heard your presentation earlier today, Brian. You're the CEO of Thunderful and a founder of Imageform. You were also previously a game writer and game programmer. Moving on to David Garpenstår, a serial entrepreneur with 20 years experience of founding and leading businesses. Track record includes DreamHack, ESN Social Software, Inferno Online. So I would say you were basically there when esports was born.
Yes, even before.
Even before you were around. That's good to hear.
Exactly.
Jakob Jonmyren, nowadays a private investor, previously a fund manager with Rational Asset Management. Also board member of the Embracer Group, involved in strategy, financing, and M&A. And last but not least, Tobias Sjögren, 25 years in gaming, production, business development, sales management. You've done it all, basically. Companies like White Wolf Entertainment, Paradox, Stardoll, DICE, all very familiar to us. So I would like to start off the panel by attaching to the theme that I have chosen to focus on today, and that is the M&A. It strikes me that with so many companies focusing on M&A, is there any value left to create? I mean, it's a competition for the targets. We've heard about the bidding processes, about finding the right fit strategically, culture, etc., etc. So what's your view on that? Who would like to go first?
I can try to start.
Please.
I think just from the perspective of a game developer, as I started in this career, there's always something new coming around. So we've seen recently examples of a company who's been actually working with Embracer Group or Coffee Stain, a Valheim game. But you constantly have these things happening in the game industry where a small group of people come together and they do something unique and fantastic. And thanks to the distribution methods of today, it can reach the whole market. So I think there's always going to be individuals who come up and create amazing value in this industry without having too much resources to begin with, but they will need that to scale later on. So yeah, I think there's not going to be a stop in innovation in this industry.
Because it's an art form rather than anything else.
Part of it is art, at least. I think that's the beauty. It's art combined with business if you're going to do good. So yeah, that helps secure it. It's not only business, so to say.
And Jacob, what's your view on this?
I certainly think that there is still room for further M&A in this industry. It's still a fairly fragmented industry, to be perfectly honest. Especially when you start to look at the subgenres that the overall digital entertainment industry consists of. Of course, it's easier to say that there is a multiple arbitrage between the public markets and private markets. Maybe that is somewhat shrinking, but in the end, it's never the multiple arbitrage as such that makes the M&A strategy. It's what do you do with an asset after you consolidate it into a bigger group? So how do you drive value from combining a lot of businesses together? Embracer Group has deployed a strategy with a lot of decentralization as the core pillar, which I think is a superior operating model in a creative industry like the video games industry. It also consists of very strong gaming entrepreneurs who are focusing primarily on organic growth, but also on bolt-on acquisitions within each of the vertical that makes up the Embracer Group. I think that is a strategy that can continue to work for a long period of time. Others in the industry have chosen other sub-genres. Some of them are becoming more consolidated. Some of them are still very, very, very fragmented. So it depends a little bit on the strategy, I think.
Just a personal note there. I really like the decentralized model. I like to think of it as the octopus model. You add another arm, and with octopuses, a lot of their intelligence is in the arms, actually. So if you give people, also going back to the real world, if you give people freedom and the resources, they will certainly grow to the expectations and deliver. I think that's a good starting point for everything.
Yeah, and I also think that culturally, businesses are different. It's very difficult to change the culture of a business. So if you start always to think about the integration, you will destroy one culture. And over time, then you destroy value. Then it's not 1 + 1 = more than 2. It's 1 + 1 = less than 2. So I think that is it's a key aspect to how to be successful in the creative industry, certainly.
David?
I mean, from an investment perspective, there's always an opportunity to overpay for things, no doubt about that, especially if you're going for already established companies. And I mean, the gaming industry is a very hard industry to invest in, and no doubt in that. So of course, it makes a lot of sense to try to go in a later stage investment and buy already established companies. And of course, I think given that we have a year of 2020, which was a very active year in terms of acquisitions, etc. I think the indications are saying that 2021 should not be less in terms of those activities. And I, like Tobias said also, the fun thing or the interesting thing with the gaming industry that it is by default an industry that's very much driven by technology. And of course, with any kind of technologies, I mean, just let's take the mobility that came and kind of profoundly changed the gaming industry, and almost half of the revenues are coming from mobile platforms, and certainly there will be more platforms coming. So there's a lot of white space that is going to be claimed in the future, and we're going to add maybe another billion. There's 10 gamers being born every second, so great opportunities going forward. So I don't think it's saturated if you dig in the right place at the right time. Timing is of essence as well.
Great. Brian?
Yeah, no, I think it's good. I mean, obviously we're in a panel with very intelligent people, so I'm just going to add 2 cents to what you're saying already, guys. I think I agree with most of it. It's as a game developer, I sort of see it as twofold. Like in some discussions, you talk to people and you can add something as an acquirer, since you come from the same environment. I mean, you can relate. They can relate to you as an acquirer, and then at the same time, it's like that means that if we were only looking at companies with a proven track record, then it's hard to look forward what is coming. So I think you need to sort of be awake and look at sort of what is around the corner, what is the next big thing, not only what have they done in the past, and let's bet on that because we know that is surefire. I think M&A is difficult. If it was easy, it would, but it's difficult, and I think you need to sort of focus on it when you do it. You can't really just do it with one arm. Like in order to create many arms, you need to use both hands, right? So
and it's risk diversification, so that's on the plus side. I just wanted to add there are, I don't know, an endless number of academic essays, research reports that say that M&A is not value creating on an aggregated level, but I think we've seen quite a lot of value creation in the companies that we have talked about here today through their M&A strategies. I mean, I'm not 100% sure I can rule out the hypothesis that each company would have grown better on their own, but still, my gut feeling is that these acquisitions, most of them anyway, make perfect sense.
But if I may add there, I think one of the reasons why a lot of the M&A activities fail is because people over-exaggerate the synergies and focus too much on integration. So you destroy the cultures and you become very inward-looking, and you start losing the organic growth path that existed ahead of a combination. So then it's not 1 + 1 equals 2 or more. It's 1 + 1 equals less than 2. So I think
Back to the culture.
back to the culture and back to the idea of having a decentralized operating model, which I think is superior. It's not about, so to say, forcing synergies. It's not about creating one big mega company. It's about, so to say, embracing in the case of Embracer, embracing entrepreneurship, right? So a deal is never an end to an entrepreneurial journey. It's just the next step of perhaps how you can accelerate it by getting access to a bigger ecosystem, access to more capital, and so on. Yeah. But I think it's a starting point where you have to justify very high price tags with synergies. That's where M&A primarily fails.
And Philip, we would love to hear you adding anything to this discussion, if there's anything left.
Thank you, great. No, I think they touched on many of the very important points, and from my side, I would say that this, it's very hard to do acquisitions successfully over time, and in this space, and I would like to say, that really, when you look at developers, you need to, you need to do your due diligence, of course, but you also need to listen to them and see what vision they have, and secure that that you make sure that the two parties are, fit together, so to say, and they can create value together. So that's it's a very hard. I think you said before, art form. So and that I think would fit very good in there. Yeah, and there's there's a lot of types you can do. As Jacob said, within genres, you can do. I see some talent acquisitions right now, and so there's a lot of varied parts you can explore in this space, and you need to make sure that fits in your overall thinking and strategy. I think
it's also worth mentioning that it's probably relevant to divide the gaming market into the more free-to-play side of the market and the premium side of the market. I mean, amazing game developers like Putte or Tobias, they make great content, but it takes 3-4 years to make it. A mobile game is created in a much shorter lead time, and it's typically the inverse relationship between development cost and marketing. So these are completely different business models. Of course, the free-to-play side of the market is a lot more of an Excel exercise. So it's about what is the expected free cash flow from these user bases, whereas with premium games, it's more of an art form in creativity, and so it's enabling creative people to create amazing content. There, of course, is a much bigger benefit from getting a diversification. So just having a big portfolio means that you become a lot stronger, and that's a synergy you get, so to say, for free by just combining a lot of creative people. The same doesn't really apply to the same extent on the free-to-play side, I would argue, because in the end, it's which game can you monetize with some kind of LTV CAC thinking. So it's very different, and I think it's also, in that sense, worth pointing out. Not everything has to be about M&A. I mean, the gaming market is a very cooperative market. People like each other. I mean, Koch Media, part of Embracer Group, signed a long-term co-publishing deal for Payday 3 with Starbreeze. Not everything has to be M&A driven. Yep. You can find forms of cooperation that's not always M&A driven as well.
Yeah, certainly. I think integration is M&A is hard. Integration is harder. So it's like keeping it decentralized is a good way to sort of Yeah, just moderate that to keep the integration risks to a minimum.
Well, that is as long as things are going the right way.
Exactly, right? So
Because it becomes harder when things are not going the right
certainly.
way. Certainly.
So it's yeah.
But it's little bit like a record company, right? They sign up bands, right? They would not go like, now we signed you, and you got to look like everyone else and do the same dance moves and have the same costumes and play the same music, right? You rather sign up individuals. So I think that's a good way of looking at it. You sign up these game development stars, right? And don't conform them. And it goes on all levels, from companies down to the individual studios. I think you need to be respectful of the creatives.
Sure. Yeah. Some level of integration, or in some cases, I think is important for us. It's been that throughout the journey here, and but in some cases it's not, right? I mean, it's then you only sort of do you interact on a management or a biz dev level, but I think it's good to be able to listen to, keep your ear to the ground to see what you should do in every specific case, of course. But just add one last thing there. I think we're straying a little bit from your question. I think there is still a lot of interesting M&A to be done. It would surprise me very much if it's drying up.
Happy to hear that. And I think all the investors watching are happy to hear that as well, because they're counting on you to not extract the synergies, but rather, well, all the other good stuff we've said. Respectfully add these separate entities. Still, there's the multiple arbitrage, which I know investors love. But let me use one of Jacob's sentences here as a segue to my next question. Pure game publishers, will they fare worse because they are just like one studio companies, or because they don't have the same diversification? So we could argue that investors will assign a higher risk premium to them, hence lower share price, hence etc. etc. Is that something you would be taking into account? I could actually start with Philip for justice sake this time. And also you are an investor. So if you look at single studios with, of course, some diversity in their portfolio, would you think that that's a more risky investment than, I don't know, Stillfront or Embracer or any other, M&A roll-up?
Yeah, in a portfolio sense, it would make more sense to get the wider perspective of Embracer, of course, rather than a small entity. But it's always case to case for me, and so there's always some really great talent out there right now developing games, and you need to see what their vision is, what their track record is, and if you really think that's the right fit, then that I see that as a really good opening for investing in a small studio. But of course, you have to have an eye on your diversification also in that sense.
Yeah. Okay.
But
Okay, so Brian, then not from an investor's point of view, but let's say you are the head of a studio that's not on an M&A spree. Do you see any disadvantages compared to your competitors?
Well, I think there will be both advantages and disadvantages. I mean, if you're sort of operating in a separate space, you can sort of concentrate on what you are doing. That's great. I think it's for us. I think your original question was about publishing and sort of traditional publishers. I think to have the diversification that you're developing and you are publishing, and you are doing other things outside of that as well, is a good way to sort of mitigate the risks going forward. If you only have the sniper approach of developing games and self-publishing them, it takes a very long time to make games, and you need to focus for a very long time on just that. It's good to sort of also use like the other medium of publishing other people's games, good games. Then I think also going forward, I think we are going to see studios, more and more studios that I think we touched upon it just earlier as well, that have success, that don't see the need for a traditional publisher, like a publisher in the traditional sense, but rather say that, yes, we'll need money to finish the project, but the project is so strong in itself that we don't want it, the game is going to sell itself. So I think publishers, as they are today, need to take that into account, that you will have very strong new companies, like Valheim, for example. Now they're working with a publisher, but the game, as an example, is so successful in itself that quite possibly they could have taken that to the market themselves. And then maybe investors could have filled a role there by just funding the development until the game was ready. So there's more to look at for publishers going forward.
And I think, I mean, if you look at it from the perspective of long-term development in the industry and really follow what happened with the Japanese publishers over time and EA and Activision and so forth, and look at how their strategies have developed, you start seeing a clearer picture rather than just looking right here, right now. And obviously, 20 years ago or end of the 90s, the only option you had as a game developer was go to a publisher and ask for money to be able to get out there on the platforms. There was the threshold to get out on your own was so high. It was basically impossible. You had some shareware happening and for some of the big developers now. That they did in the 90s, right? It were basically, it's like sanctioned piracy. Like send us money. Here's our bank account. Basically, that was they were before their time, really. But because they couldn't get their games out in any other way. But now you can as a developer, and really, I think there was a lot of justifications publishers needed to do for a while. Like what kind of value do they actually bring to it? But I think they come around now and say, okay, this is what we actually bring to the table. They realize they are also there is an option for competent studios to do this on their own. And I think that's been very, very good for the industry as a whole, and that helped the growth, right? We lowered the thresholds to get out there, so we got more content than ever, but which might be difficult for consumers sometimes to navigate. On the other hand, that's the same with music and film and whatever. Consumers figure that out, and for the industry, it helped to grow and innovate. So from an investment,
if you're not a very diversified company with an M&A agenda, you can do pretty good on your own.
I definitely think so, and I think there's a lot of proofs. And I think from an investor perspective, that's the exciting things with this industry, because you will never know what the next big thing is. There are stars who's going to pop up from almost nowhere, right? Because you didn't expect them. And there is not one like, hey, let's only invest into the big publishers. Well, look at the track record over time. Is that the right way of doing it? Maybe that depends on your investment philosophy, I guess. But if you want to be part of exciting journeys, this is an industry that supports that for sure.
I think it's fair to divide the market a little bit as well. If you look on the premium side of the market, PC console development, the indie segment has a lot of talent, a lot of studios. There is a clear path for self-publishing if you can get through the noise. So either you are 0 or you're 6.8 million copies sold, so to say. It's a bit of a game of chance in that sense, because there are many talented teams that actually sell nothing despite having a very good product to the market. But there is plenty of developers, there's plenty of content coming out. If you look at the mid-size of the market, call it studios with 50 to 100 developers, there we are seeing consolidation. I mean, Embracer has been driving that consolidation, but there are others in that market. There are less independent studios out there in that segment. And if you look at the true AAA studios, call it 100, 150, 200 developers working with traditional work for hire setups, that market has shrunk considerably over the last few years. So there you still are very much dependent on the publishers to some extent. So I think you need to be very specific of what you're looking at in that sense. On the mobile side, to be a publisher only, it's a complex business model. It works. I mean, you have the hyper casual players who works with 100 different studios across the world with a profitable model. It's not a high margin business, but it's a model that works. But for the more long tail oriented games, it seems like a more vertically integrated model is superior, to have it a very divided, so to say, between the different parts of the value chain. So I think it depends a little bit on which part of the market you look at.
Anything you would like to add, David?
Well, I think from an investment perspective, it seems to me that I mean, depending on if you're going for investment where you try to bet on the right horse, and that's of course nice if you pick the right horse, so to speak. So a portfolio makes a lot of sense, but I think it's also important to realize in doing so is that the gaming industry, apart from, let's say, the other entertainment industries, as the music industry and the movie industry, is that it's a very wide spectrum. It seems to me that the players in the industry that have a successful portfolio also within the portfolio seems to be pretty niched, right? So if you're going in and have too many different platforms or things, and you put in esports and you put in free to play and you have other things, it's going to be a very hard thing to handle. Me personally, I tend to like those companies that kind of go for their niche, and I think Paradox is a very beautiful example of that, where they kind of focus on historical kind of simulations and games, and they know their audience and they have a good pipeline, so to speak, to do it. So I think focus and finding your niche and then build a portfolio around that seems to me to be a pretty good strategy, and Embracer and Stillfront seem to also follow up on that and not try to do everything, because it's so many opportunities. So you have to be a little bit restricted, I think.
Yeah, definitely. I think sticking to a strategy is kind of what we all agree on. I mean, I think we agree on all the things we've said so far, but that is one of the most important things. I will give you some 20-30 seconds to think about it, but I would like each and one of you to pick one thing within the gaming industry, be it a game, being something else that you're looking forward to this year or the next year. I don't know whether it's like I said, games, new distribution platforms, could be whatever. Investing in a company you believe in. Just let your imagination run wild. And since I don't know if you're ready or not, anyone can just raise their hand and go first.
I can start with in very short the engagement of users. So the game industry always had gamers and users who are very participate in their creation of their gaming experience, right? You're modding games and whatever, and that happened already with Battlefield and before then, right? You get a product, but then you change it, and I think we have so many other ways of engaging these days into these products. So the participatory aspect of the products that we produce, really getting people more providing platforms people to help co-creating. I think that's the exciting part, and it's a trend that's been ongoing for a while, but it's gonna keep on accelerating.
That's very interesting. And should I interpret it as like kind of sandbox? Possibilities?
I think there's even more around that. It's not only the gameplay. You can say Minecraft is a sandbox game, but Minecraft is also so much more around that. You set up servers and you have all the merch and you have the events and everything around that. And esports, for example, becomes part of that whole holistic experience, I think.
I have a 10-year-old son at home, and he spends all day playing Roblox and Minecraft. So I'm inclined to agree with that.
Great example, yeah.
I'm excited about to see if VR takes off this year. I think that now with the Oculus Quest 2, I think it's a good chance that VR will actually happen this year. Let's see. But I think with the right hardware and accessibility of VR, I think it has the potential of becoming one of these new platforms that would complement the market and extend the overall gaming market further.
Yeah, actually, I was going to say roughly the same, which is kind of typical. So I can pivot a little bit. I mean, esports, of course, is close at heart, and I think has a fantastic future to grow. And complementing what you said, I'm very keen on to see what Apple is planning, because AR and VR are still in its infancy and it need to mature as a technology and as a platform, etc. But I really hope that Apple will lead the way, because they have such an interesting ecosystem, and that could really spark the industry, especially if they successfully manage to launch Apple Glass, that kind of thing, but also potentially their VR headsets. That there's a lot of rumors right now, but so that's kind of some of the things that I'm looking at right now. Yeah.
Interesting.
It's interesting, yeah. I was thinking more personally what I'm missing or what I'm looking forward to, and I think we can all agree that we are looking forward to the events starting to happen again, right?
Yeah.
So getting GDC and Gamescom and all that, and the PAXs up and running again. For me personally, it's like Christmas every time. You go and you talk to your fans, you talk to all your colleagues all over the world, and you sort of get sneak peeks that you don't get in this environment of what they are doing at this very moment, and also what they're dreaming about, what they think, what they believe. You go to these events. Yeah, you come home with a flu, of course, because you shake so many hands and hug so many people. But you also come home with an amazing perspective of where the industry is going that you didn't have before you went.
It's hard to get that on Zoom, right?
You're not getting it on Zoom, right? Really.
Inspiration.
Inspiration, perspiration, and lots of different things. Right?
Okay, Philip, what about you?
Yeah, I was thinking, and in terms of games, I would say, I'm really looking forward to the second half here, what's going to come out, and I'm excited to see more of these simulation type of games. We're actually working with one company on that one, so it's very interesting. And in terms of companies, I'm really curious how Embracer will unfold now, the coming years here, especially this coming year with all the pipeline. And you can see this also on Take-Two. They are really accelerating their pipeline there. So it's very curious times here, I think. Yeah.
So Embrace and Take-Two. Okay. I think we're out of time. Once again, thank you very much all for coming. It's been a pleasure to hosting this panel. And I think we've added a lot of value to the viewers investing in these companies. So they know how to steer when they are trying to find the best companies to invest in. So thank you very much. And to all the audience at home or in the offices, we'll be back at 1 with our next presentation. Tune in then. Hello and welcome back, everyone. I hope you had a nice lunch break. It is now time for CFO Lars Torstensson to present MTG. A warm welcome to you, Lars. Please go ahead.
Thank you very much, and pleased to be part of the Vator conference as well, and looking forward to present MTG. As we always do, then I usually go through our business for the ones that are not familiar with the company, and also a little bit more details as well for the ones that know us a little bit better. And I think hopefully that will be something for everyone that are participating today. So to begin with, of course, I mean, it needs always to be mentioned that we are addressing a big macro trend that is currently going on. Of course, the development of the video games and esport market that is a new entertainment form. I recall when I began at MTG, I was talking about 2.4 to 2.5 billion gamers worldwide, we ended 2020 with 2.7 billion, and we will continue to grow as people enjoy and get entertained with through more devices out there as well, and also gets more excited about the content that's being produced. Moving on to next slide then. We have a long history at MTG, and some of you might have come across us from early days. So MTG has been around for 30 years, addressing the entertainment industry in different shapes and forms. And well, in the beginning, it was more linear TV and traditional radio. It moved into streaming, SVOD platforms, and now in the third iteration, so to speak, following the split from Nordic Entertainment Group, we are now set up to invest into two very exciting industries and verticals, which are then esport and gaming. We call it a buy and build strategy, something that we share with several of our peers in the Nordic market. That means that we invest in companies that we believe would fit into the MTG family model. We would like to own a majority of these companies, and we believe that there should be a logic also to why we own the companies that are part of our two verticals, then gaming and esport. I'm going to go into each and both verticals here in my presentation, but just to give you a holistic view of what MTG is today. We are today the #1 esports group in the world through the three assets that we currently have. Two of them have been merged, which is ESL and DreamHack, and is today named ESL Gaming. And then we have also an emerging asset called DreamHack Sport Games, but I will touch upon all these three assets in the coming slides. Then we also have a strong position within both casual and mid-core through the 4 studios that we own today. And we continue to be very active in this space, and we are just about to close the Ninja Qiiwi deal now, end of May. Underpinning it, we have our VC fund. It's a quite small fund, around $30 million. It is then our way of keeping an ear to the ground, understanding new emerging trends within both esports and gaming. Some of these companies that we hold might become majority investments later on, and some of them we will divest as we see that as a better path for those investments as well. And we have recently done, for example, the exit of Phoenix Labs that was sold to Sony Entertainment. So let's jump into esport first then, and then moving on to gaming. As said, then we have a new entity that was created late last year called ESL Gaming that is now being made up of two of the largest esport assets out there. It is ESL, that was founded in Germany, and then of course close to home then DreamHack that was founded in '94, and that is based in Stockholm now. Then these two very strong assets is making up ESL Gaming, covering more or less the whole entertainment pyramid within esport. Then we also have DreamHack Sport Games, which is a little bit of a younger asset. It was founded in 2019, based out of Copenhagen, and then is set up to address then the movement that we're currently seeing with sports moving into the digital arena, becoming also esports. And then you see more traditional brands there, like the NHL, the Olympics, as well as different football leagues. We often get the question, how are you placed in the ecosystem, as there are a lot of different assets out there. And of course, being to some extent a little bit biased here, we believe that we are placed a little bit in the middle of the frying pan, feeling very good about the relationship that we have with both the publishers and the teams on the left-hand side, but also equally important that we can build our own IPs and then having direct relationship with both media distributors as well as brand sponsors. That is also giving us a good connection towards the fans out there, which is also creating a good interaction then between the fans, us, and then of course in the end the teams and the publishers. The way we usually depict esport is then through a pyramid, and that is the way we think about the esport as well. We call it from zero to hero concept, that everyone from amateurs all the way up to professionals should feel that they have a role to play within the esport ecosystem. And then, of course, there should be a possibility for everyone to enjoy esport, depending on which capacity that they have, but also feel that they have a shot at becoming the professional player within esport. Of course, this setup is very similar to what we are used to in Europe when it comes to divisional systems and so on. But we also think that it also creates an additional nice touch to esport, that there is a possibility for people to reach all the way up, and that is not the closed league format. Of course, it's also very important that we have relevant titles from publishers that we can then offer to the different teams and players. And we feel that we are today well represented when it comes to our relationship with the different publishers. Out of the top 12, we have a direct relationship with 9 of them. And of course, we hope to see that we can also evolve our discussions with the ones that we not yet have a direct relationship with as such. The reason why, from an MTG perspective, we are very excited then about the esport and the opportunities ahead, and I'm going to show you 2 slides on this. The first one is, of course, the demographics of esport, and it's always interesting to look upon how esport is set up when it comes to how the fan base is looking like versus other types of sports. And the first thing you realize is, of course, that it's a very young audience. On average, we're talking about an age of 26, 27 years old, but it's then quite well distributed all the way up to 44, 45-year-olds as well. So it's a quite wide audience that we're talking about. Just to contrast it, I mean, we're talking about 26, 27 years old fan base then on average, but if you, for example, compare to Major League Baseball in the US, we talk about 54, 55 as an average age. Of course, this is something that will over time become very attractive for example, brand sponsors or media buyers that would like to rejuvenate their customer base as well, to be able to reach out to this exciting fan base as well. And then just to take away a few misconceptions also when it comes to esports is, of course, that these fans are on average compared to other sports have a higher level of education. And on average, they also have a higher level of income as well, making the esport fan even more interesting and attractive. On top of that, of course, these fans are notoriously hard to reach because 70% of them use ad blockers of some sort, which means that the best way, of course, to interact with them is, for example, through esport. The other picture I would like to show before moving into gaming is, of course, what we believe, or if there's one slide you should remember, it is this one. We believe that we are currently under-monetizing the value of esports, and here compared to well-known franchises in the US. Not saying necessarily that this would be possible for us to close the full gap here, but it shows you at least an idea of what sort of a delta that we are trying to address. And we do recognize, of course, that these leagues that we compare ourselves to have been around for a long time, but it also gives us the target for what we should be able to accomplish within esport. Then moving on to gaming, and as some of you know, participating today, we have been very active over the last 9 months. We have created a new gaming entity called Gaming Co, together with our partners at InnoGames, where we have then organized all our gaming assets underneath. We also concluded the transaction with Hutch, a leader within mobile racing games, and then is about to close then Ninja Qiiwi, which is known for its evergreen Bloons title then, that we are also highly excited about, that will also be joining the Gaming Co as well. And we feel that we now have started to create a more diversified gaming portfolio, even though we still have work to be done here. We feel that we are starting to get a good representation within both casual and mid-core. And on top of that, we both have now a quite wide portfolio of live games, But of course, additionally, a strong games pipeline of 10 games hitting the market either this year or next year. And in total, we can now reach 22 million monthly active users, which is, of course, a strong foundation to, over time, then both build upon, but also cross-promote. I just want to touch just briefly on our latest acquisition, then Bloons, currently in its latest iteration, Tower Defense 6, which is, of course, a well-known brand for many of the gamers out there. And its popularity continues to increase as well. And we also looking forward to a new iteration that is going to be launched here during the summer, which is called Battles 2, and is the sequel of Battles. But it shouldn't be forgotten that Ninja Qiiwi is not just about the Bloons title, even though that is what is making us most excited. They also have a wider portfolio of games that are currently also available both on mobile platforms, but in some cases even on PC platforms as well. But we feel that this is a very exciting asset to be joining us, and they are also bringing the community build to the gaming family that we have in place as well. So the last slide here on the gaming asset, just to showcase also what I mean when it comes to a diversified portfolio. As said, we feel that we now have both a strong product pipeline in combination and with, of course, a young games that has recently been introduced to the market, in combination with more established games, and then games that you could then say are more in the sunset mode. The thing here is, of course, that we see a lot of synergies between our assets, and that's why we believe that through the expertise from, for example, InnoGames, we will be able to support all the gaming companies to improve the efficiency of UA strategies in combination with boosting the live ops as well, to prolong the lifetime of both existing and new games as well, providing a longer runway for us to monetize these games over time as well. So therefore, we feel that we now have a very strong foundation to continue to build upon from an MTG perspective as well. And then just to summarize, as said, we feel that we have a very strong position within esport. We are today the #1 esport group in the world. We now look forward to a return to normalcy as of 2022, and with the opportunities ahead, and to build this new entertainment form that we believe is in the making within esport, starting to both compare ourselves and compete with more traditional sports. On the gaming side, we feel that we have now a strong foundation through the acquisition of Hutch and Ninja Qiiwi, much more diversified, with a much better and more balanced games portfolio as well. And we feel that we now have a much stronger foundation to stand on now as we continue to build the gaming vertical, both organically as well as with more inorganic activities. With that said, that is the conclusion of my presentation, and I look forward to answer any questions that you might have.
Thank you very much, Lars, for an interesting presentation. I would like to start off the Q&A with a question about Ninja Qiiwi. Could you please elaborate a bit on your strategic reasoning behind that acquisition, and how if it synergizes with the rest of the group?
Yeah, I think that we have a couple of things that we believe are very important for us when we acquire companies. One is, of course, the management team or the entrepreneurs within the company. So we're talking about the Harris brothers here that has been working on the Ninja Qiiwi franchise for many, many years. But the good thing with them and their management team is, of course, that we feel that they have so much more to give, and they are highly excited about joining the MTG family as well. So that is something that we believe is #1. It's super crucial that we have entrepreneurs that joining us for a reason. The second one is, of course, that here we have then a franchise that is built on a community idea rather than on a marketing expertise idea, if I may call it that. That means that the popularity around the Bloons franchise is built on fans that are highly engaged into the game, and then drive further interest among new players as well to involve themselves in the game and also gets excited about playing it. And that is something that we believe is an expertise that Ninja Qiiwi definitely brings to the table when it comes to our gaming portfolio. Additionally, if you take it the other way, we feel that as Ninja Qiiwi more or less has been built without any UA strategies in place, there is of course a lot of learnings from, for example, InnoGames and Hutch as well, to further boost the Ninja Qiiwi and Ninja Qiiwi's performance also going forward. And of course, the last one is that we believe they also have an interesting idea on how to develop the Bloons concept now, both with the success of TD6, but additionally now with the introduction of Battles 2, which we believe is also something that we always look for is not just the success of the existing games portfolio, but they also have a strong pipeline of games that is coming out. So I think that for us, Ninja Qiiwi fits all the parts that we believe are super important for us to invest into a company.
Perfect, thank you. And I think if we turn to esports, I think the most central slide that you showed in your presentation is the discrepancy between the amount of revenue you can earn from a kind of, let's say, baseball fan compared to an esports fan. So I would like to ask you, how are we going to, close that gap? Do you see any trends in that direction? What are the most exciting things you can share with us that make you believe that this is just a matter of time, actually?
Yes. No, I think that we are working on it. And one thing is, of course, then the structure of esports, which I think is number one, which means that we become a more dependable sport, meaning that we have a set schedule of events that is reoccurring across multiple years. It is like tennis, and the Wimbledon final is always the second weekend in June, if I recall it correctly. The same thing should also be true for esport, that that the big championships, so to speak, are reoccurring on the same date as well. So that's number one. Number two is that we also we are digital by nature, but we should also make use of that benefit, being more data driven when it comes to arguing for the benefits of engaging within esport versus traditional sports. Today, the industry has been a little bit tainted by the use of bespoke KPIs that sometimes can be accused for being inflated. That does not build trust towards CMOs or boards across the world. Rather, we should take competition heads-on and compare ourselves to traditional sports on the same metrics as they do, because I think we would turn out well in that sort of a comparison as well. So I think that a more robust set of KPIs to be compared to traditional sports needs to be put in place. And that's something that we also are working on together with other leaders within eSport to get that in place as well. So that one, I think, and then it's just a question of time and creating a comfort for CMOs to take the leap that they need to do. It's always hard, it's a little bit like changing, changing a league is, if you leave, for example, the Bundesliga and go for esport instead, that needs to take some courage from a CMO perspective. And of course, we should then provide him or her, the comfort to be able to make that leap.
Okay, so any highlights you would like to stress, to give us comfort that things are going in the right direction?
I think that on esports specifically, we feel more excited today than we have done in quite some time, actually. That is partly because we feel that esport is on its way back and that we see that 2022 could be a year of normalcy. The other one is, of course, the definition of esport is becoming much wider now as well. It's not just hardcore gaming, it's also mobile gaming and also in the end casual competitive gaming, which makes the whole universe much bigger. So that's also an exciting trend that you should keep track of. On gaming, of course, I feel that gaming is just a very, very strong underlying trend that continues to deliver. And from our perspective, we should, with that in mind, be able to deliver both an underlying growth through the assets that we have, but also continue to build a much more diversified gaming portfolio overall. So that would be my concluding remarks.
Great. Just two more questions then. Continuing on with esports, do you believe that will we see physical events come back, or has the kind of the digitalization is it here to stay? Won't people go back to the physical tournaments? What's your view on that?
I think it's going to be hybrid, because I think that we still need to have these marquee events that fans can look forward to participating in, where you can attend in person. But then when it comes to, for example, national leagues, we could see ourselves actually being able to combine that with more digital format or studio format, because it's a more efficient way of delivering that sort of a concept that is maybe more semi-pro. And then we think that amateur leagues and yourself setting up a league between your friends, that would be fully digital and platform-based. So I think that you're going to see live events coming back on the top, studio events staying on the national level, and then on the amateur side, you're probably going to see a much more platform-based solution as well. And then especially, I mean, I'm just looking at the traditional sports in the US today, with the NBA going on with now more than 10 to 15,000 people on the arenas. It feels like we are getting closer to a return also for esport to get back to live audiences again.
Okay, so just one final question then. Mobile esports, how would you say, what is required from a mobile game to be esports worthy, so to speak?
Well, I mean, for the first, I mean, there we have a lot of both mid-core games and also some of the hardcore games being available in the mobile format. But I think it depends on. Usually, it is a PvP format that is the best one when it comes to competing. But now it's a little bit more my personal preferences here. The battle royale genre is also good, but it's a little bit more a mass approach then, as it is not as easy maybe to broadcast if you like to do that. But I think that there are several mid-core, for example, racing games. There are several battle royale style like PUBG or Fortnite that could be potentially also good and working well in a mobile format. But we shouldn't underestimate also more simple style games. Now, being a little bit biased there, for example, the Battles 2 from Bloons is also a PvP game that is maybe not too complex gameplay, but works super well in the mobile esport format.
Okay, very good answer. Thank you very much, Lars. Thank you once again for attending the conference, sharing your valuable insights with us, and good luck on your continued journey.
Thank you very much.
So just a quick break, and in 1 minute we'll be back with Adverty. Hello and welcome back. I have with me now Niklas Bakos, founder of Adverty. A warm welcome, Niklas.
Thank you, David.
Please go ahead.
Thank you very much. So it's a pleasure to be here today with so many great Swedish and Nordic companies. So my name is Niklas. I'm the founder and currently Chief Strategy Officer of Adverty. We're a Swedish ad tech company creating quite new and fresh way of doing advertising inside of games. So we go with the motto of creating a seamless world between brands and people. So I'm not lying when I'm saying that gaming is by far the largest form of entertainment today. It's bigger than film, TV, and music combined. So it's a massive opportunity currently for advertisers to enter the gaming vertical. Looking at the gaming vertical in detail, mobile gaming is by far the biggest platform, both in terms of people playing and also revenue-wise. It's also the fastest growing gaming platform year on year. For advertisers, it's important to reach all kinds of people, and within mobile gaming, all kinds of people are playing games. It's the only gaming platform where we actually have the female user base being a little bit bigger than the male user base. And females are not really playing PC and console that much compared to the mobile platform. That's why we are at Adverty are very much focusing on the mobile gaming platform today. Looking at the gaming vertical and comparing it to social media, for example, we can see that there's 3.5 billion people using social media today. Gaming is at 2.7 billion, but is quickly going to become 3 billion in a couple of years. Looking at what advertisers and brands are putting their media spend today, there's almost 100 billion spent on social media, but only 4.5 billion is currently going into the gaming vertical. So now is a perfect opportunity for brands to enter the gaming vertical, because currently there's only 5% of ad investments going into the gaming channel. So being the first, an early adopter into the gaming vertical, learn that channel is a great opportunity for every brand and every advertiser out there. I want to show a quick video that is in a nice way showing how our technology is working. So enjoy this short video. All right. So why are Adverty doing what we call seamless in-game advertising? Well, I guess the answer is quite simple. Traditional media channels like television, linear TV, even the web are dying from an advertising point of view, to be honest. My kids, 8 and 12, they don't even know what linear TV is. They're not spending any time on web. So advertisers, brands need to look where people are today, where the new generations are. And they are in social, they are in gaming. At Adverty, we're developing a new way to advertise within games. Advertising in games has been happening since the early 2000s, obviously, but we have a technology and a new advertising method that puts the brand message when it matters the most, and that is when you're actually enjoying your experience, when you're playing the game. We're doing it in a way advertisements should be experienced, and that is not in between your experience. It shouldn't be a 30-second break on the experience, the game you're loving to play. But what if you could actually put the brand message at the same time as you are experiencing the games that you want to play? We put ads directly into the gaming experience as billboards, posters, any kind of labels, any kinds of positions where you can actually naturally place an ad. And we have the technology to understand where that ad is actually turning up within that experience. We have an opportunity for brands to put ads contextually fit within that experience. And the best part of all is that we do it unobtrusively. So we don't throw the ad at the face of the user, and we're not breaking up the experience. Today we are within our technology stack. We have two products, what we call seamless in-play and seamless in-menu. The in-play format is our, I would say, our biggest product today, the first product we established at Adverty, and it's a pure branding product. It's a brand awareness opportunity for advertisers to go into the pure gaming experience. Think of it as the example shows here, a bus shelter with an ad. And our technology knows where that ad ends up. We can collect information about how long it is on screen when you're actually looking at that ad within the gaming experience. And we're complementing in-play with a brand performance unit called in-menu, which is, by the looks of it, a traditional banner within a game menu. But comparing traditional ad technologies where you have a banner on the gaming menu, our technology goes deep into the actual game design. So if that menu is skewed, for example, our menu would kind of follow that design, and you could do a lot of stuff very super natively within that gaming design. So the in-play ad format is obviously a great way for brands to expose themselves within gaming. We're not talking about having an ad shown for a second or two. We have ads being on screen for 30, 40, 50 seconds in some instances. So it's a great way for advertisers to be part of the whole experience within gaming, not just in between gameplay, and gameplay could be 90% of the actual gaming experience. So we also wanted to create a more interactive opportunity for brands that are advertising in our platform. So the in-play format is a brand awareness opportunity. You don't click on those ads, but we collect information that is essential to advertisers. With in-menu being an in-between gameplay opportunity, we have the opportunity to deliver a click, deliver a call to action, so advertisers could get the users to actually go to a landing page of their choice. And we believe that this solution is 1 + 1 = 3, because we're creating brand awareness during gameplay. And then we are creating an interactive opportunity in between gameplay. So the opportunities of having users interacting with the in-menu unit is most likely much higher if you have created awareness during gameplay. We are heavily focusing on the supply side of our business today, getting our technology into mobile games. And on this slide, you can see a couple of real-life examples of games using our technology and real ads being delivered into those games. I want to take the time to deliver a big thank you to our very active Discord group that has been creating all of these screenshots. They are actively playing our games in many, many different countries. And it's very useful for us to have your support. Join that channel. The link is on Avanza Forum. So again, thank you for all the help you're doing for us. We are in talks with a lot of game developers today. A year back, 2 years back, no one really understood what we were doing. A lot has changed in the last year. We have gone from roughly 20, 25 live games, nearing 40 games at the moment. Being in talks with a couple of really, really big game publishers that could potentially lead into a game changer for us in the coming months. We announced another new partner today, this morning, where we're getting the Adverty technology into Qiiwi Games, starting with the racing extreme 3D game. So a lot of things are happening on the supply side of our business, and we are seeing a much bigger interest now than compared to a few months ago. When you're creating something new like we're doing, we are disrupting the way of advertising inside of games. You want to make sure that all sides of the value chain like what you do, basically. So we've done 2 case studies that I want to go quickly into. We delivered 40-ish million ads into a very big mobile game during 2 weeks a while back, to make sure that nothing negative came out of that experience. So that's a lot of ads during a very short time of period. That game developer looked at retention numbers for 1, 7, 14, and 30 days. They looked at how that affected the daily new users, the organic growth, so to speak, any kind of app store reviews or user feedback on emails, etc. And there was absolutely no negative feedback on our in-play ads into that experience. So it works. We are not killing anything in the game. Obviously, we need to create a very strong technology that is working flawlessly, but the concept is definitely working. We did the same study on the other side for advertisers. So we asked 301 people to play critical ops with ads inside of the gaming experience. And we let the same 301 people browse aftonbladet.se with the same ads. And a couple of really interesting results. 50% of these participants said that they would prefer in-play rather than web, compared to 30% liking web more than the other. More interestingly, 84% of participants could actually be aware of the fact that there are ads inside the critical ops experience. The most interesting number is that 78% of these 84% could also recall what brand was highlighted and advertised within critical ops. We all the time get the question like how, when you do unobtrusive advertising, are you actually seeing the ad? And this is the answer: yes, you do. Even though in-play is a future format, we have developed it according to, I would say, every standard in the industry. It's based on IAB display ad standards, which is basically the web ads you see on Aftonbladet. We support static and animated display ads today. Everything we do is programmatic. So it's a very scalable solution where everything is done automatically. There's nothing sent or signed anywhere, basically. And we support all the standards in the industry. We are IAB Gold certified. We're Tag Brand Safety certified. We go along with the transparency and consent framework, etc. So we are creating something new, but we are part of the industry, fully supporting all the standards. And we have made sure that our technology has been patented as well. Today we hold 2 US patents, one that is covering the whole kind of method around the way we treat viewability, so what we call brain impression, how we decide on a scene ad, and we calculate that on size, position, inclination angles, lighting conditions, a lot of stuff. And we have that method patented, and we have another patent called color impression, which is a more technical patent on how we actually calculate everything that is patented in brain impression. So we have secured the technology going forward. For us, it's a very important way of making sure that when this gets standardized, that Adverty is taking the lead in that development. David, should I continue a little bit, or?
Sure, go ahead.
Perfect. I see that the time is very tight. I mentioned programmatic, and that is the way forward for Adverty. We deliver ads as an ad network to SSPs. And SSPs are delivering our ads into DSPs. That DSPs are the platforms that advertisers are using. We have today done 4 integrations on the SSP side with Palmatic, Smarto, InMobi, and Verizon. All of them are unique in their ways. There might be more integrations coming up in the future, but we have a very solid foundation at the moment to reach, I would say, 90 to 95% of all DSPs out there today. So the foundation is already being built. The way forward is scaling programmatic, getting thousands of advertisers to jump on board our solution. Gaming as a vertical needs to be taking a couple of more leaps into becoming a well-known phenomena. We have a way to do advertising, brand advertising in a very good way within that media channel. For us, the supply side, the amount of games we're getting into is the limit. So the supply is the limit for us, and we have seen within the last 2 quarters some really good leaps happening in the programmatic channel for us, with the upcoming quarter looking really fantastic compared to previous quarters. And looking also at the year-on-year growth, we see a tremendous 1,100% growth from nothing almost to something. And there's a lot of advertisers on the platform right now. There's over 17,000 in Q1, still buying small amounts, but that is mainly because the market isn't there yet. We are very early in our road to growth. A platform that we have built uses an SDK to go into games. That's how we create the ad opportunity within games. And I want to show a quick video on how game developers are integrating our ads to make in-play available within the gaming experience.
So I have just imported the latest Adverty SDK into my project, and I'm going to show you how you place an ad unit. So go to Adverty, Prefabs, select the game unit and drag and drop it to the scene. Next thing I'm going to do is check the Snap to Surface check button and click where I would like to place it. For this particular unit, I would like it to be bent, so I'm creating a new mesh and setting the size to fit where I would like to place it. Next thing, I'm gonna press the bend checkbox, and I'm gonna set it to convex and x-axis as that fits where I would like to place it. I will drag the slider to set the radius of the unit that I would like. And to more easily place it where I want, I go above to just fine-tune the placement. And that is how easy it is to place an ad unit in your game with the Adverty SDK. And next thing, we're gonna test if this is a viewable placement, which is something you should do. So I'll go to Adverty Debug, and I'm adding ImpVis component, as we call it, to all my units. Then the unit will tint green when the SDK has detected a view. Next thing, I'm gonna go to Adverty settings and paste in my API key. I'm also gonna check the sandbox mode, as this is not a live game. So now let's see how the ImpVis component looks in the game. So we have one placement there, and it's tinting green. And the other one, thank you for your attention.
So I'm heavily over time here. Yes, there are competition in the space. As a founder, I would be crying at this point if we didn't have any competitors out there. When we started Adverty in 2016, about a year later, we saw some competitors. Today we are 8 in total, doing similar things to what we are at Adverty are doing. We were the first out there to create our kind of technology, so we have a big leap. We are a big ahead of the competition there. We're the only company within in-game that have multi-patented technologies. And the only one that are doing both branding and performance within the gaming experience. And we have a very big portfolio. We're one of the bigger providers out there on the supply side as well. So we are leading the space still. We're 23 people in the company, working from everywhere, headquarters in Stockholm, but today we have people from New York to Singapore, and we're hiring, we're growing. Things are super exciting. So that's my presentation. Thank you for tuning in.
Thank you very much, Niklas. I think you have some solid data there that you presented to support your offering. So perhaps you will hear from more game developers and maybe even advertisers after this presentation.
That's the plan.
So if I understood you correctly, only 5% of marketing goes to games. Why do you think that is so? Why is this section so overlooked?
I think there's two main points that lies the foundation around current ad investments. First of all, brands have had no clue about the gaming vertical. 2 years ago, Adverty knocking media agency doors, and we basically had to spend an hour just talking about gaming because they didn't know what we were doing, what gaming was. The misinterpretation of gaming being a very niche way for teenage boys that are getting bullied in school, just playing games, and that is not the fact, obviously, anymore. And looking at what is happening right now, where media agencies are creating gaming divisions, so Dentsu are doing D-Game, and all of the bigger ones are creating their own gaming instances right now. So things has changed a lot since 2019 when we actively went out presenting Adverty. The second thing is that within games, you need free to play to get advertising into your product. There's no way there will be ads in premium PC console games. Those platforms are moving slowly into free to play, but you need free to play, and mobile is dominated by free to play. And looking at technical solutions within mobile games going back 5 or even 10 years, it has only been an opportunity for incentivized video that redirects into an app install, which is great for gaming companies like MAG, who presented here earlier, to buy new users for using video advertisements. But it's not the way for brands going forward. Coca-Cola, they don't want to do potentially a video that goes into a Coca-Cola app. They want to do brand advertising, create awareness. And we haven't had good solutions for mobile. And Adverty is one of the first now doing something new and enable brand awareness and brand performance within the gaming experience.
So what you're saying is it's happening now. Now is the time.
It is happening now. We have been doing this for a couple of years. It's been a hell of a ride. And now, well, last year was the first year we saw that, okay, people are starting to understand this. This year, agencies are knocking on our doors for the first time, and if it's a 1-year road ahead or a 3-year road ahead, that's impossible for me to say, but now is definitely the time. You don't want to be late to this show.
So according to your latest report, you now reach close to 20 million players every month, and your ambition is to multiply that figure during this year. How are you going to achieve this goal?
Well, it's an easy answer. Getting our tech into more games. Using our technology creates reach for us in various genres. So we want to be in hyper-casual games. We want to be in sport games. We want to be in racing games, etc. But we want to create reach, because reach is the way Adverty is going to make revenue in the end. In the end, advertisers, they want reach, and they want reach in their contexts through their ways, and we are enabling that by growing our portfolio, different genres, different ways of exposing those brand messages. So more and more games. That's one of the focus areas, obviously.
Yeah, it really feels like this is just waiting to happen because there's so much logic in your business idea. So once again, thank you very much, Niklas, for coming here and presenting. Very interesting, and good luck on your journey.
Thank you very much, David. Thank you for having me.
So unfortunately, Safe Lane Gaming had to cancel. We'll be back at 2 o'clock with Epulze. Join us then. So welcome back, everyone. I now have with me Mattias Lövgren, CEO, and Marcus Lövgren, CMO of Epulze. Nice to see you guys. Thank you for participating. And the stage is yours.
Thank you. Okay, so we are talking about esports, competitive gaming, and one of the fastest growing industries at the moment, with millions of fans all over the world. And for those fans, this is not just a game. This is an interest, and you follow your team, your favorite players, and you keep track on what is happening in the community. And you have seen those the professional players on those big arenas with 10,000 people in the arena, with the professional players on stage playing for millions of dollars, with millions of people watching from all over the world via Twitch or Facebook or YouTube. And if you can imagine that level of excitement, we take a sliver of that excitement and deliver that to all the gamers that sits at home and play that can't be on that professional stage. And this is something we always felt like customers to ourselves, because Marcus here, that besides from being the CMO of the company, also he is my brother, and we always joke a little bit that we cut our hair similar style. He used to be really good, and still is, but he used to be really good at Dota 2. He was ranked top 100 in the EU leaderboard, and he could still not get that level of excitement playing competitive games. But we always tell the same joke that he has 10,000 hours of what we call marketing research. And at the same time, he played more and more. He had some friends playing online poker, and even though they weren't particularly good, but they could still, win $100, and they could invite people for dinner or drinks after the game. That's why we started thinking about, okay, can we combine that same feeling but for esports? And if that would been available at the time, we wouldn't start a company, we would still be playing. So why do we do this? Marcus is not alone in this. Like hundreds of millions of people from all over the world are looking for this level of competition. And there are relatively few alternatives, and the entire esports industry is still very under-monetized. And we describe what we are doing as like an amusement park for gamers, where we have a platform where we have people compete in computer games where they are already heavy user of. So we are looking for those that are really interested in those games we connect to. And around this platform, we have built an ecosystem of different verticals that we have built to funnel users down to this platform. We have a subsidiary in Malaysia where we have a broadcasting studio that that is part of this ecosystem. This is one of those arenas where 10,000 people are sitting and watching this professional team, and this is really the pain point of esports, that over a third of the people that are watching, they want to actively compete, and not everyone, of course, can be on those teams that compete in front of all these people. Because if you look at the total prize pool distribution within esports, there is roughly $500 million, and almost everything of that has gone to the top 50,000 best gamers, and over half has been distributed to the top 500 players. So there's a big disconnect here in the market, and there are roughly 500 million people playing esports, so the prize pool distribution is super top heavy. So that's why we built this esports platform where regular gamers can compete against each other for money and other digital prizes. And like the foundation of our operation is this automated esports platform where people create an account and they connect their games to it, and they compete in tournaments and leagues and single challenges. So in its simplest form, it's you and me compete against each other, and the winner takes the prize. And it's a little bit the same feeling when, if we are out playing golf, the loser has to buy the winner a lunch, for example. So it's not really you becoming the richest golf player because you gained a lunch, but it's that level of feeling that the last couple of minutes is really interesting because you are going to beat someone, and that level of excitement, that's what we are looking for. And we started out with the game Dota 2. It's a great game, really, like a truly esports game, but mostly because of Marcus' a little bit unhealthy obsession with the game. So the platform is really the center of our operations, but around this we have built what we call the esports ecosystem, and that is, as I said, designed to funnel users down to the platform. And there's a lot of synergies and to keep the users engaged and excited. Okay, so we run some offline events. Of course, during the last couple of months, that has been a little harder. And we engage in a lot of influencer campaigns, and we have our content studio production team. But today we're focusing a little bit more on to talk about our professional tournaments, because the platform in itself is not for the professional teams, but it's a great way of attracting users to the platform, and you do that in two ways. First, we invite people from the platform that can compete in qualifiers. Yeah, in the qualifiers for the games, and then those qualifiers turns into finals, and that's where we invite the professional teams. And when the professional teams come on board, there are lots of users or a lot of viewers, and all of those viewers turn into users in the platform.
Yeah, so that's the second vertical here, like Matthias hinted about in the beginning of the presentation. In our offices in Kuala Lumpur, we've also built an esports broadcasting studio. So similar to a regular sports studio that handles, regular esports broadcasts, we built a broadcasting studio with shoutcasters and analysts to deal partly with our own professional tournaments, but also with handling esports production for other tournament organizers as well. And what this does is it allows us to drive traffic from the live broadcast back to the platform. And thanks to this ecosystem, we're able to produce these events that kind of perfectly showcase the revenue driving and user acquiring potential of this ecosystem. And one example is the pro tournament we ran called Winter Masters that had a prize pool of €50,000, attracting some of the best teams, generating lots of viewers on the live stream. I believe we had almost 30,000 peak viewers, which meant we received almost 7,000 new signups to the platform from that specific event, while also generating revenues of over €100,000.
And with this platform and the ecosystem, we reach a lot of gamers. And this is for a lot of brands, a very hard to reach audience, because you're not listening to radio, you're not watching TV, and when you're online, you probably have an ad blocker in the way of ads. And it's a really good audience because they earn more than the average person, and they are well educated. So it's a perfect match for a lot of brands. So we create something we call a non-intrusive marketing campaign, where you, instead of putting an ad in front of the content that the consumer wants to consume, you are part of that content, and you create like a feeling of gratitude because you are enabling this person's biggest interest. So you are part of sponsoring these kind of tournaments, for example, and that creates like a win-win-win situation where brands can get in contact with this audience, our users get a better experience, and we got some revenue. Because if you remember first time if you play football or something, and the first time you got like an advertising on your game jersey, that was the feeling is not like, okay, now we have advertising in the way for us playing football, but you feel almost like a professional game player. And this creates like a snowballing effect.
Yeah, so basically in the long term, it results in a partly self-financed user growth where company A is sponsoring a tournament, which allows us to use the sponsor funds for prize money and marketing of that event, which in turn leads to increased user growth. So when company number 2 is interested in doing a similar campaign, we can ask for even more sponsorship money and use that to increase the user growth further.
So in the long run, we are making more money from the actual users, but in a shorter time perspective, we are making more money from this sponsored content and all our media channel and all of that we designed around this system. So this is probably the slide that makes me the happiest. We have built a damn good team in all over the world, and that is one thing that is truly unique with our company. We are today 39 people spread all across the world, and that has been a key factor to our growth, and especially having marketing teams in the entire world that could have the ears to the ground and understand the different nuances in different regions, and what kind of influencer should you connect to, which kind of campaigns, and which kind of teams do you want to invite to different tournaments. So that has given us that has truly been a key factor to our growth.
Yeah.
So the road ahead. We recently did a financing round where we brought in just over 50 million Swedish kronor into the company, and that is to really accelerate the company into the future, where we are putting roughly 50% on tech and 50% on marketing. We are going to focus on 3 areas: user growth, more user activity on the platform, and in a much more focused way, focus on user monetization as well.
Yeah, so registering new users for us is not very difficult. We've got a proven track record from Dota 2 and also Counter-Strike and Valorant that we recently added to the platform, and we know our strategy moving forward. We have a somewhat low user acquisition cost of between $1 and $4 per user, depending a bit on region. And when it comes to user activity, adding new games is also what's driving the user activity, but it's far from the whole picture. And I think what we're really proud and happy of is that we feel like we have a very good sense of what it is that drives user retention rate. So if we take a look at our active users, for example, if we manage to get them to make 1 deposit and play 1 league game, we more than 6-fold increases the retention rate after 3 months.
And now we are making more money from the sponsored content, and that is a great way of building up to the growth that we are doing. But we still think in the long run we're making slightly more money from the users themselves.
Yeah, and just to end this with some highlights, we can see a really fast user growth based on the previous strategy from Dota 2 and Counter-Strike, and we're going to see tremendous user growth now that we add more and more games to the platform. A lot of this user growth is going to be self-financed thanks to the esports ecosystem that we built around this platform. Our global presence makes us ready to scale on a global level, and us being able to scale now makes it possible for us to target 2.7 million registered users in the end of 2023, where we're also going to target cash flow positive.
Yeah. Thanks.
Okay, thank you very much, guys. Very much looking forward to following your journey, but we'll get to that in a bit. How have you been impacted by the further digitalization of esports tournament and the increased esports viewership during the pandemic?
The pandemic has been somewhat a limited factor because we gained a lot of traffic from those offline events that had qualifiers online. So that is taking away a little bit of our growth, but then of course we especially in the beginning of the pandemic saw a huge spike in user activity when everyone was starting sitting at home. So in like March and April as of last year, our user growth definitely spiked, and we could definitely see a big increase due to that.
Yeah. I guess one of the strengths with Epulze as well is that even before the pandemic, we had our global team, so we're used to dealing with a lot of digital communication within the company as well. So while some companies might have had a harder time adapting to online meetings instead of physical meetings, that was already part of the culture at Epulze even before the pandemic. So
yeah, for us it's more or less business as usual.
Yeah.
I see. Thank you. I really like your slide about the ecosystem. It's I understand it. It's everything is skewed towards acquiring players and retaining players. And what would you say one or several factors that are important for driving user retention?
I think it's super important to like we are really dedicated to creating an experience that people really want to stick to, because they really feel engaged by playing in these tournaments. So of course, like to keep adding like great tournaments and everything that is the foundation of the product, that will always be the most interesting thing. But to keep on adding, okay, you play a tournament and then you read a blog post or you watch somebody else's play, because of course you're taking some time in between games. So that they are important to find this in between things. But like the foundation is still to keep add fun things that is our core product.
Yep.
I see. So you have a goal of reaching 2.7 million players in 2023 and become cash flow positive. What are the main drivers behind that? What do you need to focus on to make that happen?
Of course, like a little bit like Marcus said, of course, adding new game titles, because our current growth has basically been Dota 2. So it's basically one game. So it's really easy to see that, okay, if we keep on scaling with more games, okay, we have 6 games in the end of this year, and we could keep on scaling to other games. But that is only part of the story, because we need to increase, okay, we showed one slide that, okay, we know that we increase by creating more leagues, for example, that increases our retention. So if we do some of these easy steps to increase retention, to focus on more and better leagues, and that in combination with the user growth in terms of new games. So we can't really do only one. We need both of those.
I see. Okay. And just one final question to round it up. Do you have any plans for an IPO? Because you're a private company today. Do you have any plans to list your shares?
Yes. And okay, you can always talk about it from a financial perspective. It's a really good way of bringing capital to the company. But this is so core to what we are doing. If we are bringing this level of excitement to people within the gaming industry, if we also can split the experience to other gamers, that, okay, we go to work every day and feel very connected because we are working within and we are owning shares of a company in the gaming industry. If we can put that feeling out in the world as well, that is the biggest reason for us to list the company, because we have proven that we can have access to capital in a private environment as well. But to share that overall experience, to keep on building the family that we started with. We started a company with 3 brothers, and like every time we grow with a company, it is with users or partners or team members or investors. Every time we want the feeling should be that the family is growing, and to be able to add a new layer of that, a lot of fun.
Yeah, I see. And actually, it strikes me now that the word family has been, repeated here during this event several times. Companies, Embracer wants to embrace companies. Other companies say, "Hey, come join our family," etc., etc. So that's a very nice kind of state of mind. It's not this cutthroat competition. Well, maybe it is in other ways, but at least there's this aspect to everything as well. So. With that said,
also nice people in the gaming and esports sphere.
Sorry?
There's lots of nice people in the gaming and esports sphere.
I bet there is, or I know for a fact. So once again, thank you for your presentation. It will be very exciting to follow you on your journey forward. Best of luck.
Thank you very much.
Thank you.
So we'll take a short break and we'll be back with Flexion Mobile CFO Niklas Korisar in just a few minutes. Welcome back once again. This time it's Niklas Korisar, CFO, who will present Flexion Mobile. A warm welcome, Niklas, and we are eager to take part of your presentation.
Thanks a lot. Thanks for that. Nice to be here. Will you share the presentation? Thank you. Okay, I'm the CFO of Flexion Mobile, and I'm sitting here in London. I'm finally back in the office, sitting with colleagues and have some energy around me after some 15 months in lockdown, which has been quite a long period, quite a tough period actually. Anyway, we're back, and that's very nice. So next slide, please. So Flexion Mobile is a distribution platform for alternative Android games. And that means we're not building games, we're distributing third-party games. We're a London-based company, 58 staff, we have the strongest game portfolio and the strongest channel offering in our market. We went to First North 3 years ago. Our history is very important. We always distributed games. We were leading on the Nokia Ericsson time on try and buy games, and then we went into smartphones in 2013-14. So we are focusing on the mobile market within gaming. We're not distributing games into App Store, so we focus on Android, 85% of all devices, that's where all the growth is. We're not giving games into Google Play, nor do we do China, so we focus on what we call the alternative market. It's a massive market. We have had very strong growth in the company, revenue growth, and because of that, we also achieved now for the last financial year positive EBITDA in the company. It was a real milestone. Next one, please. So why are we here? What's the problem? Basically, all the developers in mobile are producing one game for Google and one for Apple. Everyone does the same. 3 million apps in each store, heavily overcrowded, very hard to be seen for developers, very costly for developers to be seen. So they struggle to grow as a group. At the same time, it's hard for them to reach out to new stores because the games have become so complicated. You know, each game is a live service by itself. So they kind of struggle with alternative distribution. They may be out in 1 or 2 stores, but it's kind of half-hearted and doesn't really work. So there is a market problem, which we solve by next slide. So we have developed a service offer to the market where we can basically go to the game developer and say, guys, you know, you done a game file for Android for Google, just give us that file and we convert it for you and do all the steps for distribution needed to generate money. So basically the offer is give us the existing file and we send you back money. We're the only company in the world who can do this at the moment. And the underlying reason for that is the technology. And we have basically since the start worked on automated repackaging of game files. So what we can do, we have this machine which we, you know, you put in the game and the machine automatically reads the binary code and then put in the functionality needed so we can rebuild, you know, reproduce files for the various stores. And that is something you need today when you have a lot of updates to your game all the time. This machine is, we have a patent for it in the US, we're still patent pending in the UK. Sorry, in Europe and Hong Kong. Next slide. So simplified, you know, the developers are reaching the market within mobile with 3 distribution pipes. 2 distribution pipes is to Apple and Google. And basically what we're saying them is, you know, we can be your third and only alternative pipe where you reach the rest of the market. Next slide. Sorry, I should have added here also that the stores we're working with here are stores like Amazon, Samsung, Huawei, Xiaomi, one store in Korea. So we're working very closely through partnership with those stores. What we really, and we go back to this slide now, what we're really proud of here is the games portfolio. And there is a saying on our market is that content is king. And if we're not the king, we're definitely the crown prince. So we have 19 games, but the games we're focusing on are top 800 games in the world in terms of revenue. So there is only one publisher in the world who have more than 19 top 800 games, top grossing games in the world. So when we come to these stores, we are providing the biggest portfolio of games already today. When we started, we've only been active really here for 3 years. What is also very importantly is that we generate, say, $30 million per year on this existing portfolio. But the universal revenue for this IP, for these games alone, is somewhere in the region of $1.5 billion. So for us, it's really key to get the existing games, growing further. Why shouldn't we take 10 or 20% of the universal revenue, which have a multiple, revenue multiple of 5-10 times on itself? So existing games for us and strong IP is very, very important. Next slide. So we released our quarterly numbers here earlier today. We've shown a lot of growth, quarter-on-quarter growth, about 17% over the last 2 years. We released the Q4 numbers, were March to March financial year, and we have had a lot of growth over the last quarters, and we basically managed to maintain that momentum in this quarter. Yes, we done 4%, but this is a quarter without any real kind of cyclical marketing promotion campaigns. So the underlying quarter, the growth in the quarter is still very strong. We also, because we're in the audit period at the moment, so we're quite late with the quarterly report. We also released in the quarterly report that we have in April, we continued its growth. We have 14% higher revenues in April compared to the average run rate in the previous quarter. So still growing a lot. Next slide, please. If you look at the gross profit in the company, it's very linear to revenue. We're working on a rev share with a rev share model. So a lot of growth in gross profit at the same time as the cost base in the company is very stable. I don't think it's that many companies who can show 100 to 200% growth in revenue and at the same time only take in 13 people extra over 2 years in the company. So very stable cost base and very scalable gross profit in the company. What I also would add here is the Q4 numbers is slightly higher, but we have some end year adjustments because we're doing the audit, and at the same time we had quite a big negative FX factor in this quarter because the pound and the dollar is playing yo-yo at the moment. But that's short term. Next slide. So the effect of this high growth in margin and flat cost is pretty obvious. Is that you start to get some pretty decent movement on your EBITDA in the company, and we came up here to a positive EBITDA for the full financial year. That was better than we actually expected, and a real milestone for our company. So that's very positive. Next slide. We also, because we're coming into a new financial year, we have given a bit of a guidance on where we see ourselves going. So at the moment, we have a quite narrow offer. I'm coming to that, where we focus on organic traffic. And within this strategy alone, not looking at future possibilities, we see that we're going to grow with something from 40 to 60% of revenues in the company over the next 12 months. So a lot of growth. Next slide. At the same time as the staff cost, which is by far our biggest cost in the company. Every year we grow by 5 to 8 people, and we're saying we're going to continue doing that going forward. So very limited cost growth. And this is again under the existing offer, not looking at other possibilities. So next slide. So when we look at, this is, I think, a very important slide to understand if you want to look further, you understand Flexion. And that is that if you look at the KPI section in our quarterly reports over the last year, you see that the key driver for us over the last year was really our top games, where we basically over 12 months tripled the revenue, average revenue for these games. So we've gone from somewhere in the region $150,000 to $500,000 per month in revenue on our top IP in the company. And yes, there was a bit of early COVID effects, but we also added a channel. But what is very important here, that we work with all channels through very close partnerships, and where we together, work out new strategies how to reach this absolutely massive user bases that these stores have. So that is the key growth driver for us in the company. That is the existing games. But of course, what we want to do is to add more games to the portfolio. And here again, it's focus, as we said, going to be on top-end games. Our top 3 games at the moment generates 10 times as much revenue in the average mid-size games. So a little bit slower kind of addition maybe on terms of games, but when they come, they're going to have a much higher effect on the revenue growth in the company. We will take in small, mid-sized games also, but they're more for strategic reasons. The channel may want it. Existing developers wants us to help with the whole portfolio, to come into new relationships, etc. So we will also do a number of mid-sized games in the company. Next slide. So we kind of summarize what we are at the moment. So Flexion is a very narrow strategy at the moment. There's more games, more channels, and better distribution on existing games. That's what we focus on. That's what we're doing, and that gives you a lot of growth opportunities. It also gives a very attractive diversification, both across games and the channel side. So I think we're already seeing that the revenue side is stabilizing in the company quite a lot. But what is really important here is that, and the painful thing with a platform is that it's very hard to come up to critical mass. And I think it's fair to say that we've done that now on this platform. So we start to see a very low marginal cost, which is very attractive. But we also raised £10 million before Christmas. We have £50 million in cash and EBITDA neutral. And so we are actively now looking at widening this service offer we have by adding, there's a lot of new means of distribution in the market, all focusing on kind of paid traffic. And we see it with the influencer marketing, with the data optimizing strategies. You have in hybrid distribution, you have direct consumer, you have the whole traditional UA coming to our market. So we are looking at how we can add value to our service offering by going either do this in-house, look at these strategies in-house, do it through partners or through M&A activities. And that is the really, really exciting thing here, what we're looking at. And to say, we released in this quarterly report that we have now hired a senior user acquisition manager who's going to lead the kind of UA activities in the company. And we also hired a really experienced M&A team who do corporate development activities in the company. So with this, you can add kind of a turbo effect to an already really high growth strategy, and at the same time start looking at your margin play in the company to take that beyond. I think on this existing strategy, we say we have a soft target about 16% margin, we're at 12%, but with this you can go way beyond 16%. So that's very attractive. So just to finalize, wrap it up on the final slide. So Flexion Mobile, we have the biggest biggest game portfolio in our market. We have the biggest distribution power on the market. There's a massive market opportunity here. We are the first mover on this market. We are building barriers of entry by being there on the market. We're very clear and implemented strategy, and we're growing revenues a lot in the company. So it's never been better opportunity for us than now in Flexion Mobile. Thank you.
Thank you very much, Niklas. Impressive indeed. So a few questions, if I may. Yeah, you mentioned on your last slide barriers of entry, and are there any? If you could elaborate on that, and also any other modes you see as your most important? I suppose your kind of decoding or recoding software actually is one of those. How long would it take for someone else to develop something similar? Are there any competitors even doing what you're trying or what you're doing? Please give us a bit more flavor on these subjects.
This is really the key thing, is that we see competitors or potential competitors coming up all the time because everyone, a lot of people want to enter this space. But if you think about it, if you don't have the technology and the distribution, you can't attract any games, and that's basically where a lot of people are failing. They have something, but they can't attract the games. But that also means if you don't have the games, you can't take the technology to the next level or the distribution. It's one thing to sign up to a store, but to come in and form strategic partnerships on high levels with Huawei or Samsung take years. And that's why our history is so important. We already, when we came into smartphone, had a relationship with stores and the big IP holders at that point in time. So you need to start very slowly. Technology itself, yeah, you can have some kind of early version of it, but before you run thousands and thousands of games through them and games updates through them, you're not going to have a watertight, technology. And we're talking here about the world, market-leading IP, and then we're never going to let you try to build your technology. So it is really difficult for other people to enter, and that's why we are learning.
Yes, I recall a meeting with Flexion some 3 years ago when you had difficulties to attracting the kind of biggest, most popular games. You didn't have really the resources or a distribution to prove, and then you ended up in the right spot. And I guess that has been a journey that took you several years, and that's what anyone else would have to go through to catch up.
Yeah, I think a few years ago we were running traffic games, games with a lot of users to test our platform, but we didn't by purpose take in any revenue games, proper high games, because we were not ready. If you have a problem here on your technology, you may have $1 million of wrong, of fraudulent sales on this on this game. So this is the Formula One, what we're doing. So what we've done is to build it up slowly, and 3 years ago going for it properly, and now we're taking on the really big hitters because it works.
Is there anything that is kind of a potential worry in your mind in terms of competition?
We see them come. We see this player. They come up, but they all struggle to get the IP at the moment. So not really, no. My biggest worry, I don't have enough time to do everything I'm supposed to do because it's so much happening. But that's a more private worry, I would say.
And just briefly on acquisitions, then, what type of companies would you target?
So what we see in this market is that it's fragmenting out now to a lot of new ways to think how to acquire users or acquire traffic, and it's quite a fragmented market with small companies dotted around the world who's all making good money, but they're quite small and they struggle to work with the big developers because they're not big enough to cover the whole need. And here we're kind of perfectly positioned to start grabbing those through partnership, through in-house, or work along them, or buy them to expand our service offer, and that then to grow what I call existing games, to take it to a completely different level in the company. Our position is perfect for this. Yes.
I do share your enthusiasm. So thank you once again, Niklas, for a very impressive presentation, and best of luck on your continuous journey.
Thanks a lot. Thanks.
Okay, so we'll take a short break. So, hello and welcome everyone, back again. This is the final slot of today's conference. I will present to you 3 distinguished guests, all with impressive resumes within esports. And yeah, this is the esports panel. I would like to introduce all the 3 participants separately. So, if I may, I would like to start with Inge Heidorn, a partner and investment manager at GP Bullhound. So Inge, I can read from your resume that you had quite an impressive career within the financial sector. You also became an entrepreneur, founding Centat Asset Management. So congratulations on all those achievements. I'm very curious to hear, what's your relation to esports today? What's attracting your interest in the space?
Yes, if we start from the beginning, sorry to jump back in time a little bit. I started trading tech in 1994. So I've been doing tech for a very, very long time. And what we do at GP Bullhound, just to put things in context, is that we invest in themes. And we found gaming/esport as a really, really interesting theme. And that's why we are, so to say, focused on esport. And we even started a fund which is really, so to say, focused on esport and gaming. And it's together with Credit Suisse in Luxembourg. So we are really engaged in the esport on the public side, which is me. But we also are engaged on the private equity side, investing in unlisted equity in esport, as we see the market growing very, very rapidly.
Perfect. Could you perhaps give us a few examples of your investments just briefly before we move on to the next panelist?
Yes, if we take on the public side, it's mainly the bigger names, and I'll give you the reasons later why we are focused on the bigger names. So it's like Activision, doing the Call of Duty League, an Overwatch League, it's EA Sports, and all the way down to Logitech, which is doing, as you know, the peripherals and so on. But it's the big names on my public side. On the private equity side, we are invested in Challenger Mode and so on. But on my side, and bear in mind now when we're talking here in the future on the panel, is that I'm on the public side. So I'm very much focused on public equity.
I see. Thank you. So I would like to continue with Frank. Are you with us?
Yes.
Hi, Frank.
I am.
Where are you currently? Where are you calling in from?
I'm calling in from Singapore. I'm based in Singapore.
Okay. So a brief introduction then, if I may. You are the winner of German Game Developer Award, European Games Award, and Asia Sports Industry Award. You established GDC Europe as one of the most important game industry conferences in the world, and Games Convention Asia, GC Asia, that is, as one of the main industry events in Asia. And also in the year 2000, you started to work in the esports sector, creating the International Esports Conference, also founded the German Esports Association, and you're currently the Chief Operating Officer of Epulze. So you've been around, to say the least, within this segment. So please tell me, how did it all start? What drove you to this space?
That really reminds me on the first steps when I go in when you said all this. It was every time if it's a need what you have, and it was really in the late 2000s where we have to create a games sector at the biggest consumer electronic shows in Europe. and the publishers don't want to establish to exhibit there. So I thought, what should I do? I wanted to fulfill my duties. And then I did research, and then I really saw these kids playing competitive games on a platform, and I said, oh, what they are doing. And I was so fascinated. I said, okay, we have to bring this to the event, and then we have some games there, and we have the games there. So this was a starting point and my first touch point with esports, and then I was fascinated all the time until today.
Thank you. So moving on, Thomas Lykkedal, Chief Strategy Officer, DreamHack. You've spent your whole entire professional life in esports, first as a player, but later as a tournament organizer, team manager, founder of Noob Magazine, eGames.tv, Rakaka, and you joined DreamHack in 2008 and made it one of the world's leading festival and esport companies. Of course, you merged with ESL in September 2020, which is the world's largest esports company, and you now oversee ESL gaming strategy and partnerships in the Nordics. So, how did you end up here in the first place?
Actually, as a visitor or attendee at the DreamHack Festival 2000, I think, 15 years old, came home after that event and were mind blown by sharing the same passion with so many other thousands of geeks and nerds, playing games, having fun for a weekend. And I already then told my mom that one day I want to organize DreamHack myself. And now, 20 years later, that is true for the last 12 years. And it's been a really cool ride to be part of the DreamHack story, building that up from one event to today. In a non-COVID time, 15 events in 9 countries. And obviously the last year we also merged with our sister company ESL, forming the biggest esport company. So yeah, that's quite the journey.
Okay, so thank you for that. I would like to share a brief personal story with you, not on the same level, but still, I believe it was the end of the 80s, and the department store Åhléns City in Stockholm had actually a gaming competition. It was Sega Master System, 8-bit, California Games, BMX. I think I bought the game on a Friday, went home to practice for 2 days, came back Monday and won the event. So that's where I peaked in esports, end of the 80s. Okay. So I would like to, there's a lot of things you can read about esports on the internet, and one of them is that quite a few companies actually make money on esports. But I would like to challenge that, which by asking each and every one of you to mention 1, 2, or 3 things that have impressed you within esports the last year. Who would like to start?
I can start.
Please.
Yeah, so I think what impressed me this year is especially the smooth transition from offline to online. Obviously, this is natural to esports because it's a digital native sport, but I think the last 5 years, esport have pushed itself into physical arenas, venues, and even sports stadiums. And I think we realized with COVID that esport is still digital first, and the core experience and the original experience of esport is online. And I think what we have almost missed in esports the last few years is that the mass participation part and the mass viewer part of esport is taking place online. So this year actually helped us a little bit taking esport back to basics, which means we have pushed esport back to online broadcast with online matches, which I think is really powerful, coming from a great development the last the last 5 years, where we have pushed esport into big sports stadiums to actually also go back to that model, and that have really pushed insane viewership records across esports on platforms like Twitch and YouTube, but also you can see Steam and other gaming platforms breaking records this year. So the engagement and the engagement from the community have been on a new record this year, which I think is a really positive story around esports. And obviously the business part also have really challenged itself to think about cost and the operational side of esports, but also be able to transform revenues into an online category rather than an event category.
So offline events have suffered, online events have thrived. And to a big...
I mean, obviously there's not been possible to host any events in any sport. And I think that's really powerful with esport, that sport carried on throughout the pandemic from day one. I think the first event, Katowice, that was cancelled, was held online directly, and after that, pretty much every event have been broadcasted online, and very few events or esport events have been cancelled, actually, comparing to, let's say, traditional sports where I think a few leagues and other properties have been completely cancelled and back this year.
Okay, good. And Inge, do you want to go next?
Yes, I'm looking at a little bit of a bigger picture. I think the engagement has really exploded with COVID, and the thing I really like with esport is that everybody can participate, and that's really interesting. And if you also look at the statistics of the number of players and the engagements all across the age. But I think that what's really starting to impress me now, when I think it's going to be the key thing here for esport going forward to make it really a big, incredible thing, is that we are now getting real advertisers in, not just the ones that have a direct connection with esports, so peripherals and computers and so on. We are now getting the big names that are, so to say, the big names in general markets of advertising. So the Protector & Gamble's, the Gucci's and so on, interested in esport. And I think that is going to be the key driver here going forward. So that's really what's starting to impress me now, that we're getting some type of stability and credibility in the industry, which is going to drive the revenue stream of the industry.
Thank you. And Frank, would you like to add your piece?
Yeah, I would. I don't know where I can stop. I think I have a lot of points to mention here, but Thomas and Inge said, I think the two most important ones. I think it's what me impressed was, one was with the endemic brands, was Inge meant that a lot of non-endemic brands came into the space last year. They moved from telecom companies into this space. I know 5 telecoms, big telecoms, they moved into the esports and let's say engagement, games engagement business. What I really like is the innovation. What happens within the esports industry. So what Thomas meant, from offline to online events, but there was a lot of other services. So for example, happened in the educational area with boot camps, for example, or even that universities now started and look much more into let's say the serious education in terms of esports management. So there are a lot of different movements. And the last one is what I see, that there's the interest from investors in our industry. It's growing and it's stable. That's what me excited most.
So both interest from investors and advertisers, if I understood you correctly.
Yeah, and education.
And education. Yeah.
Esports goes more and more into education and plays a part in that area.
That's really interesting. I haven't come across that yet. Could you please give us an example?
It's an example. We see that with that people are sticking more and more at home. So how you can train your game skill, you can go better. There's two ways that you can have a boot camp with coaches, or even that teams get more and more professional. They got more and more coaches of if it's about the games, or if it's about the mental area. So there's a lot ongoing on the industry side. We see that some universities pick up esports management as a study within examens. For example, in Italy, this happens, and then they teach it since spring this year. So there is something going on, and it's more and more established in, let's say, in the educational area.
Okay, thank you. Very interesting. So the $100 billion question that we have touched upon with mentioning that sponsors are moving in, is that esports is actually less monetized than other sports. Lars from MTG showed this slide comparing how much an active viewer or fan was worth. And of course, we're all excited to see that gap close. And also speaking about investments, I don't know how many times I've been in investor meetings where investors have, been surprised that, so someone wants to watch others play. I'm surprised people are playing video games at all, and you're telling me someone wants to watch other people play. But I think that it's changing now, and also it's not very strange, because a lot of people like to play soccer and they like to watch soccer as well. There's not a big difference there. Okay, so back to the sponsors. You mentioned, Inge, that you see these big brands, these basically lifestyle brands that are now moving more and more into the esports, putting money there, being sponsors. Is that something that you have seen a big shift in the last year? Is that how we should interpret you?
Absolutely. I think we're moved from just the ones with direct interest doing the marketing around esports events to really seeing, this is not esport, but it's very close to it. Gucci selling bags in Roblox, Nissan releasing the new car in the Zynga GTR game. So you have a lot of these type of stories now, but I think what we've been missing before, and I'm still a little bit missing in the industry still, is the structure, because the general advertiser want to have a structure of the industry so they know what they're betting on in terms of ad money. They also want a structure in terms of how things are done, the policies around, and a few things that we are still struggling in esports are the behavior of some of the gamers and cheating and swearing and so on. So all of those things are improving, and the structure, we are getting there. So I always take the example, sorry to jump on a little bit, but I always take the example of Premier League in the UK, for example. It's one league. Everybody knows what to sponsor and how it's played. And we need that type of structure also in gaming. We don't just need one league, but we need a structure, a long-term commitments, and so on. And that's when I think it's really going to take off. But as you said, we already see Nike creating a department just for esport and advertising and so on, and Louis Vuitton the same. So things are moving in the right direction.
Yes, thank you. Anything you would like to add to that, Thomas? I also, in the meantime, your colleague, Lars, he mentioned robust KPIs comparable to other sports as a way forward to build the structure that Inge is referring to. So what would you like?
Yeah, absolutely. I think we teamed up with Nielsen to start really compare with traditional sports on not only viewership metrics, but also understanding the demographics and getting better data across the board, which is happening already. And I think those KPIs are developing all the time. I think the industry, together with Nielsen, kind of established a new term, which is average minute audience that most of the actors now are using, which is a much better comparable term to other sports. But I think overall, I think Inge have a point. Bigger brands getting in here, obviously, getting a brand like Mercedes-Benz into esports helps the entire automotive category to invest in esports. And after that, we saw 8 to 9 car brands getting into sponsoring or getting active in esports. But I think that the overall monetization problem is also related to B2C revenues, where I think we need to see esport as kind of a new era sport, very connected to youth culture, similar to maybe snowboarding and skateboarding with their X Games, or MMA with UFC, where there's been a quite similar development, a lot of focus on building the top and building media rights and brand partnerships. But I think the overall power of esports is to really get the casually driven grassroots much more organized, and also get them involved in esports in a more organized manner, and also get them to ship in $1 or a few into the system. And obviously that is currently happening in the actual games like Fortnite or Counter-Strike. So if we would count that business into the esport business, that would obviously give a different story to the monetization problem. And I think it's happening a lot right now in the esport industry. A lot of startups, a lot of interesting ventures that is really shaping that, and obviously tournament platforms like our own, like ESEA, but also Epulze, eSportal, and so on, is really trying to develop this part of esports. And I think this will also help the monetization problem or challenge over time. But back again to the really big questions when it comes to brand partners, I think the key is obviously KPIs, but also we need to give it some time and also get that structure that Inge is referring to. But I think we're also moving into a new decade now, when we see even traditional sports like Premier League and football creating super leagues, at least on a paper. So it's going to happen a lot the coming 5 years, where I think esports have a lot of opportunity to challenge some of the other traditional sports for sponsorship money.
Frank, would you like to add something on the subject?
Yeah, I think the main points are already mentioned. I don't want to talk too much about broadcasting license. I think this is another revenue stream that will be playing a big part in future years. For us as a platform with Epulze, our product as the platform, and for us it's important to see how we can monetize the users. So what kind of new features can we add to the platform that gives us more engagement, more attention with the users, and what services can we offer users that we can monetize them.
Yeah. Okay, so I think we can all agree esports will be also significantly bigger in 5 years' time than it is today, given the strong trends we see in the sector. More and more users creating more and more content, and sponsors are there. New business models are arising. But if you were to choose one or two segments or company types, if you wish, best fitted to capitalize on the future of esports, how would you think from kind of an investor point of view?
I can start as I'm a fund manager, so it's a little bit on my table. But with that said, I think initially my bet is that the big guys with strong IP is going to be the strong winners. So for me, it's like Activision with the Overwatch League, the Call of Duty League, EA Sports with FIFA, and so on. So my short-term bet, meaning next 3 to 5 years, I would say the ones with a big IP and with the games, until we see more of the challengers coming in with interesting business solution that works. So that would be my bet. But remember also, I'm coming from the public side, so I'm investing in public equity.
Thank you. So, Thomas, what would you say?
Go ahead, Frank, first.
No, I think what's interesting is the tech part. So what kind of solutions can be developed? So what Epulze did, for example, as a platform, you can create white label solutions out of that. There are other features what you can add. So I think everything around tech will be a big part in the future. And
to add to that, I think it depends on what you look for as an investor, obviously, and what kind of scope you have. I shouldn't advise too much here, I guess, but I think the B2C opportunity I talked about is probably a little bit more long term, while what Ing is referring to, the, let's say, sponsors getting in and the media rights opportunity is probably more connected to the bigger IPs out there, as he said, publisher owned, but I also believe third party owned, like the ones that ESL and DreamHack are hosting, for example. There's a very clear, if you follow certain games, that those leagues and those properties also attract a wider range of sponsors, actually, because it's more easy to work with a third party than directly with the publisher sometimes, and we can also be more professional on the broadcast part. But I think the B2C opportunity is a little bit more long term, where I think you need to more have a 5 to 10 year horizon to really see return there. But I think there's a very obvious opportunities there if you don't look for, let's say, golden formulas or golden keys, rather jacking into existing proven revenue models like e-commerce, and I think those kind of things, more themed in esports and gaming. I think that's going to grow a lot the coming years.
I see. Okay, so thank you very much. We are running out of time. Thank you very much for joining this panel. It has been very enlightening, and hope to see you in the future on other events. And to all the viewers, investors watching us, thank you very much for your attention today. We hope that you have found this interesting, and this will help you become a better investor in this space. And stay tuned to other tech events from Vator Securities. We are hosting a Tech of Tomorrow event on the 9th of June, so be sure to get your invite to that. Take care and be safe. Thank you.